Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. 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 Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. Hit the like button. Hit the like button. Hit the like button. Like. Hit the like button. Hit the like button. The like button. Hit the like button. Hit the like button. Rocket scooter, yeah, yeah, yeah. Rocket scooter, yeah, yeah, yeah. Hit the like button. 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 The like button. Hit the like button.
Trading futures in the night, so cold rocket dreams, resilience in the fold. Hedge pressurizing, the charts are bold. DD bands rapping, stories untold. Riding with rocket scooter AI, up we go, reaching for the sky. Every trade holy never dies, on the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red flashing, voices loud. Future rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Sanctuary in all its splending. Mind on fire, never ending. Dreams of gold, endless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
Howdy, y'all. I'm not muted this time. I figured it out. What's up, guys? Hello. Trying to figure out. I'm always getting confused on my Discord here. So many Discord channels I have open now. I gotta figure out where everything is. There it is. Found it. I'm like staring. I'm like, what the heck's going on? Hey, the real Matt is here. The real Matt can be heard. Oh. Ooh. Evening peeps. Morning peeps. Both. Wherever you are in this world, good morning. For those of you. Good evening to those of you. Good afternoon for those of you. Stu, Cafe, Dominic, Plan Zero, Lucas, Jason, Ransom, Benny, Icewild, Mark, Morris. Icewild, how are you liking your Tradeify, by the way? Have you started playing with that one yet? The winner of our last Tradeify Straight to Funded giveaway. I need to update my stream here title. Sorry. A typo? Why is it called 37? It was a typo. No, last stream I made like 18,000, something like that. Am I missing something? Yeah, you're missing something. I didn't update it. I do 50,000 administrative tactics in the morning, like getting the plat. So in the morning, yeah, I wake up. Here's what I do. I sit down. I talk with the tech team. I lead the projects. I talk with the other shareholders of the company. I talk to tech support and get them prepped. I get all my accounts loaded up and ready to go. I go on Discord and do all the promotions for the stream. I get there, and then I message everybody in Discord. I message everybody in all the other Discords that I'm part of. And then I get my stream loaded, turn the lights on, get the music playing, set everything up perfectly, fix my fucking hair, and sometimes it's a goddamn typo. That's what you're fucking missing. That's why I love you guys. Sorry about that. Happens. Be nice. It's all in morning routine. Oh, and also make coffee. And also take pickle out to pee. Oh, and I also get eggs. I got my eggs. I got my eggs. People forget that I don't just get up and stream and goof off on I run a corporation. That's also as part of my morning routine. To get up and make sure everything goes smoothly for you guys. Got data feed people to yell at. You know, the drill. You know, iDoc in her live. Yeah, she's great. Let's get our DD bands up. Where are we today? Market's going to be selling off today, probably. Why is the sign? Why is my sign not lit? Who do you think you are? See, I'm telling you, it's the little things I forget to do. Y'all gotta be so y'all gotta be so hard on me all the time. So hard on me all the time. Anyways, back to the roll call. St. M's, Morrow, Victor, Lucas, Mark, Morrow, Ice Wild, Dustin, Kaizen, what's up? Kaizen from ETF, gracing us with his presence. Today is ETF giveaway. We love ETF. We do giveaways every Friday with ETF. It's amazing. Excited for the 20-day challenge, but not in the group. Please help. Pierre, go to your... Let me just show you. Let's go to the thing here. Hold on. Here, you need to do this. Let me show you. Okay, you're not in the group, but you will be. We'll figure this out. Give me one moment here. Oh, my overlay always does this and starts off black like that. Okay, so what you're gonna do is gonna go to your Rocket Place dashboard. Okay, you can go here. You're gonna go to My Communities, and then you're gonna click Claim on whichever one you see the Rocket Scooter one. Click Claim, and that should give you access to the group. If somehow that's not working for you, go to the Discord and then send me or Slacks, actually, if it's right now, Slacks a message. He'll hook you up. Yeah, the morning routine is like this beautiful symphony of like orchestration of a million things that I have to do. That should help you get in. Another short here. Oh, yeah. I took some shorts overnight off of MHP. That was a pretty simple setup. I was up very late. I'm already up like $6,000, I think. Something like that. Already up this much. MHP short, super simple. It was no brainer. Whatever that is. 47, 57, 60, yeah, 63, something like that. That's right out the door. Opening green. Let's not mess it up. You email me, no response. Let me double check I got it. Here. I don't have an email from you. What did you email? And what was your email? My morning routine like Ashton Halls. At 3 a.m., I get up and I dunk my face to a hot bowl of acid to prepare for Wall Street, what that's going to do to me. Just kind of get used to the pain and the torture. And then what I do is I stand in front of a mirror and slap myself in the face a couple of times. And I tell myself, you're not going to be a degen today. You're not going to be a degen today. Then I cry for 30 minutes. And I take the tears that I'm crying and then I wash my face clean with them. It's a wonderful exfoliant. And then by 4 o'clock in the morning, I jump off my diving board, hang in the air for 30 minutes, contemplate what I'm doing with my life. And once I land in the pool, I lay there and I stare at the sun. The sunshine hit my stomach. And while I'm floating there, IDOC brings me eggs. And I come here and do my work. Every day, same routine. Crying in the mirror helps, especially for an hour. Nothing better than, what am I doing with my life? Great morning routine. If you guys don't know the meme, it's already on its way out. It was it was like the Hawk Tuah. It's one of those 48-hour ones that was funny for 48 hours. And now it's on its way out, but it was a goodie. Can I please explain why I decided to short off of MHP overnight? No. I'm not going to explain that. Someone here explain that. What a simple question. Why wouldn't you? It's a question you should be asking. Somebody else answer that question. I want somebody to I want the student to be the teacher today. That was so easy. There you go. Icewell nailed it. MHP is always a rejection. Every single time trade. Every single time. It was a perfect setup. Perfect setup. Perfect setup. Okay, let's try this again. Have you been to the class, Murrow, about the strongest trade setups? The best. So what is that? Okay. 57, 67, 70, 73. Oh, wait, no, that's 7,000 again. 57, 67. Yeah, so. Good job, good job, good job. Sentiment today. Let's look at it. Let's talk about it. I still like I have a little bit of a cold. It's kind of going away, but still. Oh my god. Scrambled eggs are like ultra fluffy today. It's like eating snow. Look, she did a good job, but like they're like so small and so fluffy. I'm wearing scrambled eggs in my lap. Overnight MHP is missing. Really? Overnight MHP isn't every single time trade, no matter what. EU plans concessions for Trump after reciprocal tariffs hit. Okay, let's talk about that, right? Markets preparing for this April 2nd thing, pricing all of that in. Today's Friday, big news day. Let's see what we got. In the morning, we had core PCE, price index. Wait, no, that's already happened. Yeah, so today we had the Michigan numbers in 50 minutes, 5-0. So right at the turn of the hour, after market opens, we got the Michigan numbers to play with. That's going to be really big. The consumer, the inflation expectations over the longer haul are now going to start incorporating the effect of tariffs into it. So that Michigan number is going to come out pretty gnarly today. What I would do, and what I would absolutely do today, this is going to be the biggest piece of news that we've had all month. This is going to be bigger than the FOMC meeting, okay? I promise you this. These Michigan numbers are known to be brutal in transitional environments. It's the icing on the cake, okay? Market is very, 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 very sensitive to that. Now, VIX is below triple B, that number we talk about with market sensitivity, but it may not be the case, but I'm expecting the market to sell off today. What just happened? So we all have the news right in front of us. There is a news event that the EU plans concessions for Trump after reciprocal tariffs hit. So. As much as we'd like for that not to mean a retaliatory behavior, I was thinking maybe like concessions meeting that they give him a bag of chips and a Frito pie. Concession stand joke. No, but that's kind of bad. So, right, the market's going to respond to this. A little bit of movement, financial juice hitting that up. That's just so nice how their algorithm does that and shows the moves in the market. Other than that, with the Michigan numbers coming out, it's going to be pretty big today. So I wouldn't sleep on. I wouldn't sleep on a trade at that moment in time. I would be fully to the sidelines when the Michigan number comes out. You know, right now, the question is how much inflation are we going to experience? Because the market has just been uber sensitive to inflation since COVID. That's been the talking point of the bears. Inflation, 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 inflation. How bad is it going to get with the tariffs? And, you know, any expectations, dot plot from the Fed, consumer sentiment numbers, whatever, anything is going to move the market quick. You have to just think ahead. Nobody realized it's going to be so major unless you think ahead. It's not going to be obvious to see. So thinking ahead, I'm expecting it to be huge because the market needs to understand, like, nobody's really doing the math or the retail side of here's what the inflation is going to actually be like with tariffs and this, and this, and this segment, right? Any quantitative data like that will kind of give you that answer. Tariffs don't matter like at all. In the long haul, I don't think they matter either. You know, Wall Street doesn't see past the shadow in the next quarter earnings usually. So next quarter earnings are going to be worse than last quarter's earnings across the board. Nobody's going to outpace sales of whatever tariffs are going to apply. So next quarter is going to show a decline in all companies. Right? So Wall Street's pricing in that decline right now. And that's something that we just should all accept. And then by 2 quarters from now, the tariffs aren't going to be a part of a thing. Markets can continue to rally. This is a 1 quarter, bear sell-off. It's about 1 quarter long. Just Freeport everything. Freeport, Victor, Masterclass, free glasses, everything. We'll pour it all and chill. What's up? What's up, everybody? Good morning. So in the overall kind of grand scheme of things, we can see that the S&P is still kind of like moving its way lower. Our greater market has been 2 bullish signals out of the 3, so still fighting bull setups all day yesterday and maybe today. Still possible, but we're going to look at the setups only. We know lower DD band is always a pretty good setup at the ratios greater than half. I like to long off of that, but any break today could be one of those red days that continues down the test lows. So be careful that today doesn't crash things out. That's what I'm trying to say. Does she play games with me at all? Yeah, we'll play Overcooked sometimes. You know, and get into like a vicious fight after that and throw stuff at each other, and one of us runs out the house screaming and yelling and slamming the door. How that game does that to everybody. No, it's an Overcooked game. We actually have fun when we play games. You ever played Overcooked though? It'll test the limits of your relationship. Same. Which one of you is the asshole of the group? There's always an asshole of the team. Babe, put the tacos on the left, the burgers on... Are the same. Overcooked is an amazing game. If you want to see if your relationship is going to last a long haul, if you can survive an hour in that game, you guys are good. Moving out's even worse. If you play Moving Out, that game is actually hard. I do. I get mad at her for falling off the map, and I don't understand. You got to go here. You got to go here, and you get like this little path like this, right? And then it goes underwater, and then it comes back like a different path, right? And this girl runs off the map like repeatedly. Like she'll do it 7 or 8 times in a row. It's where we're just like laughing our asses off, and she just tries again and falls off. And I'm standing over here with dirty dishes, ready to run back to the other side. I can't get across till she gets across, and she just runs off the map. Just like that. It's actually kind of funny. She's actually really good at games. I'm not just memeing her pretty hard. She's actually pretty good at stuff. But yeah, we game on occasion. We do something. We do some kind of activity all the time. All right, welcome to the stream, guys. ETF giveaway today. We're looking at market opening below MHP. We did have some reciprocal plans from the EU for concessions against Trump in response to tariff stuff. Market somehow moving up on this. Loving that. I'm already up about 7,000 today. It's not dexterity issues. It's more like Switch issues. Something about playing games on the Switch always feels like it's slow and laggy. I think because it's not like a very hardcore gaming system like PlayStation would be. Like PlayStation and Xbox ultra responsive. Switch is still like playing like a Game Boy. Like you feel like it moves, and it moves like milliseconds delayed after you push the button. Huge input lag on Switch. I always feel it. The Switch 2 hardware. Nintendo's always going to make like, you know, like weaker systems. Nintendo's not out there with like a 3D graphics rendering powerhouse. And a Switch is about as powerful as an iPhone, which is still pretty powerful, but. All right, guys. I'm feeling short setups today, but we'll see what the market says when we come out with the data. The greater market, we always put it down here at the bottom, greater. Don't forget to hit the like button. We're doing an ETF giveaway today. Every 500 people that we get, we give away a Tradeify account. We'll do that today as well if you guys stay here at 11. Our boot camp has started. 20 days, $20. Don't forget to join the boot camp. Our educational program that runs you through everything. Have you guys been? This is day 2 of the boot camp. If it's your first time there, how are you liking the boot camp? I want an honest review from your first experience there. If you're on second day 2, how are you guys feeling about what's the information? Was it worth $1? You know, like that's the feedback I always like to see. We build a little bit at a time. It's all about repetition. That's why it goes at the pace it goes. You're playing Dark Souls with her? Yeah, that'd be kind of fun, actually. I do like Dark Souls. Greater market 1, 2, and 3. DD ratio is going to be greater than half. Okay, we already know that out the door. It was really high yesterday. It's gonna be pretty high today. SPY is questionable if it's gonna be above or below monthly hedge pressure or not. And then monthly maps are gonna be bearish probably. Insightful experience. You like the part when we get free Arby's? That is the best part. That is the best part. So the pregnant man officially should be the Arby's mascot, I think. I think he does a good job at representing. I'm not pregnant. I'm just full of Arby's. That's what the commercial writes itself. How hilarious. You remember in the 90s when we had goofy, quirky commercials and now everything's all weird and PC? I miss having, remember like the Budweiser frogs and all that? I miss that era of television commercials. Pregnant man walks on screen and they're like, hey, you're a pregnant dude. No, man, I'm just full of Arby's. And then the emoji pops up on the screen. The commercial writes itself. Insightful experience at the boot camp. Awesome. First time boot camp. It has been incredible education so far. Thank you. Appreciate that. Learned a lot within 2 days. I love it. And for more, I need a nap after LOL. Definitely worth it. It's detail. At the front, it's heavy. The front is supposed to coach you into a mentality. And then each time we add one extra step. And by the end, you're confident in everything. So somebody said, why did you short overnight a monthly hedge pressure? I was up late and I was up early. Why did I put a short here with the stop there and just let it ride and get out? Well, we always know MHP is a 90% reversal chance under ideal conditions, and I always play off of MHP every single time. When we hit from the bottom, if the MHP resilience, the orange line, is less than 0, I'm certainly going to short it with a pretty heavy hand. If we hit it and it's at near 0 or above 0, I'll wait for the break and then I'll take a long on the break every single time. This is a transitional pivot for the market. Okay. That's it. So today being below MHP, I am looking for pressure down into there. And then if the D ratio is greater than half, I'm going to long off that band. But I do fear that today's another down day as we're continuing to creep lower. Now, again, anything can happen. Those Michigan numbers come out, but the market is just looking like it's ready to trade down and it's trying to capsize. This kind of low consolidate, but anything can happen. This could rally up and go to all-time highs again. So remember, you can see both sides. The equilibrium is pushing this way, and also the equilibrium is pushing this way. So any upward movement today would be a big-ass green day if we get it, right? So, or wherever we get it, would obviously rejoin that path, but I don't think we're going to get there. I think if it continues to press lower, the market's trying to figure out this part again. Volatility and VVIX are giving that as a dead giveaway, as the market is starting to build uncomfortable levels of volatility. Compared to where we were, it looks like we're creeping back up to this triple B. So one more down day as we interact with this triple B, the VIX goes up and taps it. Ideally, we want to see VIX down here to get those razor sharp pivots that we love. So hopefully we'll stay there. So looking for this today or looking for breakout moves to the upside today. I'm just marking this for my impact lines. We're good. Don't forget to hit the like button, guys. Guys and girls, welcome to the stream. Welcome, welcome, welcome.
Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the
300 likes today, Tradeify giveaway. 500 viewers today, Tradeify giveaway. Automatic ETF giveaway. ETF coming out with their direct-to-funded program. Excited to see that. That's why we love Tradeify here, because direct-to-funded is my favorite. Skip the evals. Why not pay to skip the evals? ETF coming out with direct-to-funded. I'm so excited about that. I love direct-to-funded. I never trade evals. I don't want to play the game. I got money. I can afford the ones that have direct-to-funded. I'll pay for it. I'll pay every single time for advantages in the prop firm world. So giveaway today, 11 a.m. All you need to do is be here. Leave the stream on if you're going to go. Just leave the stream on. The numbers get there. Everybody wins. And we're going to do giveaways every single day on the stream. We're going to start doing bigger giveaways. I'm going to start doing like 20 account giveaways to one person. I'm going to start doing lifetime membership giveaways. We get bigger and bigger and bigger. We're just going to be giveaway stream. This is going to be like show up for free stuff stream. But in the meantime, you have to hit the like button. So, ETF, DTF, yeah. I wish these glasses I can see in. You guys didn't realize that these are glasses from Bitcoin 2022. These things are very, very worthy souvenir. Look what's on the side of this. How many people out there have FTX sunglasses? I could probably eBay these things for like 10 bucks, dude. Can you see this? I got a souvenir. I have a Wall Street souvenir. It's going to go down in history. That's like if I had Bear Stearns sunglasses. You know what I'm saying? You could team with them. Easily worth 10 bucks. My glasses cracked. Yeah, so funny story about Bitcoin 2022. Friends of mine that I went to Miami to stay with all left to go to the Bahamas to hang out with SBF and his team. And I was invited to go and I didn't go. I had to come back and work for you guys. But I could have actually, at the height of FTX, gone and hung out at the compound in the one in the Bahamas. Wolf Financial and all those guys went. Isn't that crazy? You give me $20? That's overpaying for these things. They're clearly. I mean, I'll take your free money. I mean, I could eBay these things for like at least 10 bucks. It's part of Wall Street history, baby. Okay, goofiness aside. ETF, DTF, we're excited, Kaizen. You're here. That's amazing that you guys are coming out with the straight funded program. That's phenomenal. The industry needs more of that. With our 500 viewers today, we will go and straight into Tradeify giveaway like we do every day as well. You'll send me your FTX shirt from Coachella. So I can be a walking ad. No way. That would be hilarious, man. That'd be so funny. All right, we love our hit the like button. All right, yeah. Everybody hit the like button. Yeah. All right. Market pulling back just a teeny tiny little bit right at the open here. We're going to see what we end up getting. Just kind of guessing right now. We will be gapping down. Looks like we closed yesterday close to about the 57.45 level in the S&P. And we are opening up roughly 20 points lower. Great. We're going to have a huge redistribution zone. What's going to happen is resilience is going to open negative today. And we're going to see what happens if resilience goes positive. Deo. Daylight come and me wanna go home. Can't hear me over the music? My bad. Yes, thank you, Day. They're all pretty much in the same spot right now today. And Q is trying to break through MHP, fell below, and hasn't interacted with MHP with D-Band yet today. So I'm looking for this to pull back today. You know, I feel like today is going to be a big sell-off day, guys. I feel it in my bones. As Phil Collins would say, I can feel it calling in the air tonight. Your FTX glasses crash. Oh, that's hilarious. The iconic photo of me from Twitter was wearing these blue. I say iconic. It's been on every major news outlet. I'm so iconic, guys. You know the drill. I'm such an iconic photo. JK, just kidding. So monthly hedge pressure is a short setup today. I'm feeling shorts. Are we feeling shorts? What do y'all feel today? 21 Junction Grass is hilarious. You have a couple of Celsius shirts. I mean, from Coachella. Oh, like when Celsius was just getting big. Oh, that's hilarious. You know, when IDOC was in college, she was a she had like a promotion side gig where she would go to the concerts and hand out Jarritos, like the Mexican soda before it was big. That's what she always tells me every time we go to Austin. She's like, "Oh, I used to go here and hand out sodas." It's pretty good. I like it. It's tasty. I know. Do you guys like? I know Texas. We get a lot of Mexican stuff here in Texas, like Mexican products, Mexican sodas, Mexican Cokes. Do you guys get Mexican products northern from Texas? Because I know if you go like anywhere north, like San Antonio, like northern above San Antonio, Mexican food, quote unquote, turns the shit. Trust me. I've had Mexican food in like Lincoln, Nebraska, Wichita, Kansas, New York. I've had, and it is awful. Blech. You know, San Antonio is about the limit. You go northern San Antonio, Austin maybe, it goes bad. Y'all get good Mexican products out there? Mexican products are pretty good. They got some good stuff. Y'all get in Toronto? Jarrito, strawberry? Oh yeah. Oh yeah. Y'all get good Mexican food up there? In Texas, we're spoiled. Mexican food is a culture thing in Texas. When I was a kid, we would eat, well, even not just real Mexican food, but like Tex-Mex. But also real Mexican food is pretty big down here. You'd eat Tex-Mex as a weekly thing if you lived in Houston. It's like a tradition down here. God, it's horrible. It's so bad for you. It's cheese and beans and tortillas and meat and just fat. It's bad, but it's good. And even a real Mexican food is actually really good. It's one of the best cuisines out there. Y'all get Taco Bell. That's it. All right, so downward pressure, MHP resistance down to DD band. Looking for that. Let's see when the redistribution zone comes out in the first 2 minutes to see what we end up getting. And see the resilience number is actually opening up bullish, so the market might actually try to fill the gap. So let's see what happens. Let me make this slightly bigger for you guys to see. Oops. Nasdaq resilience negative, S&P resilience positive. So it looks like we're trading down to open the market up. Exactly. Did I feel it? Did you feel it in your bones today? I felt it in my bones today. Downward moves. Market might be crashing out. Be careful. We have the Michigan numbers coming out in 30 minutes, so don't sleep on that either. That's going to be a massive event. There's Michigan numbers today. We know it. I felt it today. Here we go. Numbers coming through. Okay, finally coming in. Data coming in. Coming in now. All right. All right. Let's see what we get. All right. Let's get that downward pressure today. All right. Take a look at what we got. Question is, do I want to do anything at the lower DD band? Let's watch SPY because SPY still has farther to go. The downward pressure from MHP down to DD band. Get that ratio coming in soon. Let's get our liquidity maps coming through. Alrighty. Breaking MHP. Oh gosh. MHP res negative. Should I take a short on this? Let me double check. Wait, am I at the wrong spot here? Resilience is, oh wait, resilience is positive though. Okay, let me look at this. We are at MHP. So MHP break is a downside move. If we get MHP break, I will take the short. Yep, writing it down. I actually proxy shorted on NASDAQ, but we're going to watch NASDAQ. Can we see if we have any red lines on NASDAQ to... Let me double check this really quick. Cover my short at the band and take the profit. Okay, that was good. And I'm going to wait for the numbers, but I need to calculate a rally. So just basically took a short scalp to the bottom of the band, and I'm going to see, where we get from here. That was incredible. That was pretty quick. I think we have a red line here. $19,789. I'm flat. That's what, 11K, something like that today. I don't know. Y'all do the math. Help me do the math really quick. Still waiting for that ratio to come through. All right, DD ratio. Looks like we're locking up again this morning, but DD ratio is 0.37. You can see it right here. Okay. All right, so DD is not less than half. It's really bad today. DD less than half. Okay, we are bearish on that side. S&P, we are slightly fighting for MHP, so still bullish. Okay, but not fully bullish. SPY is greater than MHP today. What's up, guys? Don't forget to hit the like button. We're ready to go. Ooh, what an awesome start to the day. 5 minutes in, I'm already up over 10K. Okay, let's wait for this one for a little bit. I'll analyze some liquidity maps in just a second. Always get out of the way when I could. That was a quickie little scalp on MHP break, but I covered when I saw the interrupt in the way. All right, so if we are holding MHP today, that polarity is shifting. I thought it was a break, and I thought we were going to get it, but when I hit the interrupt, I got out of the way. That was just a quickie scalp. I think I make $500 per account, something like that, or $1,000 per account. We're looking for today liquidity pocket every single time. Now that I have my bearing here, this is an every single time trade from here to here. If we break and I bounce right there, resilience is greater than 0, we actually could fill the gap today. So that's actually kind of nice. We also have resistance pressure from here on MHP overnight. So the market is very much, there is a short setup from there, and there's a long setup from here. And if there is a break, there's a long setup from here. So basically, it's a coin flip right here at this MHP. Now, your fundamental belief is as good as mine. DD ratio less than half. It's more bearish than anything. So be very careful on this one. I don't normally short, but off of MHP overnight, I will. Okay, so we're shorting in between two strong pivots. This is the one I tried to make right out the door. Like I said, one contract, I'm just scalping this a little tiny bit. EST trade goes from there to there, and there's resistance off of that. So there's short setup this way, long setup this way. That's QQQ. S&P in a similar boat, kind of in the middle of the range, though. S&P in an illiquidity pocket also can have resistance. Now, positive resilience, I'm more inclined to see this possibly go up and fill the gap, but we have a lot of pressure going on through here. These Michigan numbers aren't going to be so hot. Yeah. So, in all honesty, I kind of feel like this is probably the wrong trade to make, but let me close this out. I'm in the wrong spot. Let me give it a little bit more heat on this one. Let me retry this. Hold on. Let me wait till it gets to the actual. I'm too early. Never short early, by the way. So let me wait till it gets to the band and then make a decision. Res is greater than 0, by the way. So if I guess you would put a gun to my head and tell me, I'd rather wait and see if we get a break on liquidity pocket to go from there to there and interrupt right there with the 1-to-1. Let me see if and so one could take the short off the band. It's a possible setup. I mean, off of MHP, but also waiting for the break is a good setup as well. ES would be the same pivot. Right here. Let me see if I can get really closer on NASDAQ. Closer to the edge. Resilience numbers are strong, but NASDAQ is not. It's trying to move. So that's the junction right here. DD ratio is less than half. So with it being less than half and trying to push, we can likely get resistance off a bear zone. So it is this we call this our coin flip setup. All right, let's see if I get something off of that. So the problem with the coin flip setup is it can go both ways. We have resistance pressure from here because of the ratio being less than half. There is resistance off of this bear zone in QQQ from right here. So the DD ratio less than half is a short setup from here because it lines up with the bear zone, okay? That's what I'm looking for. But if it breaks, there is a push this way for the gap to actually fill to the upside. So it's literally a coin flip, and it's hard sometimes to make the decision here. So the greater fundamentals I look at is I have two, one is bullish and two are bearish. So I'm still kind of like it can be a bull day, which is why I'm not hitting it with anything hard. Just taking it light. Ooh, ooh. Why do you trade overnight in MHP? Because one of them is the monthly hedge pressure in the futures, and it's still a pivot in the daytime. They're both useful. So you have pushing from both directions. They're both useful. All right, so short setup from here to support the bull zone. Nice little interrupt. This is about 32 points in NASDAQ from this top point. So right at about 890, give or take. Or 880 is that resistance. I'm almost like looking at trade if I like fuck your consistency rules. This is kind of like meh. Don't forget, Michigan numbers are coming out very soon. If there's an MHP break, I'm quick to get out of the way. So we're going to watch this one. Literally coin flip on this. Looks like there's a little bit of a reverse going on there. If I get the coin flip wrong, that's okay. I'm just going to respond to it. MHP reses are negative though, so there is resistance from here. But this little move right there, a little bit of liquidity coming in. Let's watch S&P for its pivot. I'm in that same boat there. SPY is kind of in a stuck in a liquidity pocket here. There's that big resistance because of the Nasdaq coming through. Big slam down on that. I don't know, I feel the short trade today. It just feels like it because market's trying to transition out of the way. Now, DD ratio is trying to push towards bullish. Be careful. It just feels kind of icky. Nasdaq resilience is negative, so pressing off of half gap for Nasdaq is another thing we're going to be seeing. You didn't shake me out. Good. Bottom of the box is resistance on Nasdaq as well. Res is less than 0. On Nasdaq, we have resistance here. So we have basically a big fight between the S&P and Nasdaq. Your guess is as good as mine, but I'm taking the short side trade today. This is called Mode 2 Resilience. Whenever the white line is less than 0, which we did, we are fighting on Nasdaq. It is -8. So res less than 0 is resistance from there. Yep. Nothing clear. Conditions not improving. Nasdaq conditions okay. S&P. S&P usually wins the fight though. So as much as I don't like trying to do some scalps to these Michigan numbers come out in 15 minutes. You know what I'm going to do? Let's go ahead and sit on the sidelines. Let this market pull back just a little bit. I'm going to take this retrace. Let me pocket all of this in my accounts here really quick. And then for those Michigan numbers, let's just be flat. Flat, 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 and flat. I'm closing early, but whatever. Let's be flat. Going to Michigan. There's the final tally. Just scalping, having some fun, doing some scalps. That's not bad for the first 5 minutes, 10 minutes, 15 minutes, whatever. All right, 3,800. Just a couple shorts going in there. Plus 29.42. Plus 20.20. Everybody's favorite year, 17.91. Plus 14.12. 11,900 bucks. Hey. Right. Good day. 65. Well, that's a good decision for now. I feel down today. Don't be the first bear to the high dance, baby. We know the rules with that. Don't forget to hit that like button today. We will be doing amazing giveaways. Amazing giveaways. All right. Wow. Thank you. Thank you. Thank you. Appreciate it. DD strengthening. Right. Strengthening. That's why I'm kind of like on the fence. There's short setups and long setups. I don't want to take the long setup today until I get a very strong confirmation. DD ratio is less than half, so the bottom band is probably going to breach and fall. Do I think it's long off of MHP? I don't think I want to take it right now because of the following. MHP resilience is less than 0. That already takes the liquidity map. MHP long, let me find this one really quick. Any one of them. Your MHP longs usually are going to be like medium trades. So if I take a medium trade and I already lose confluence, it becomes a small. And the DD ratio less than half, I'm going to consider that confluence loss also becomes a sit out. So I'm going to convince myself not to buy MHP because we're losing levels of confluence. This is negative. This is less than half. So the strength I have on my medium trade here is diminished to probably I should sit out and wait. As a matter of fact, if it does break, it's worth a chase to the downside on S&P. Okay. So the market, I don't believe market's just going to outright crash, but where it is right now is on the edge of crashing. This is the edge. So let's wait and see. Last thing I'm going to do is take another 20K loss today, right? How do you go from 304 profit in the bottom account and take off a winning trade for 385, then show that all your accounts increased by more than 385? Because I traded in all the accounts. I'm trading all the accounts together. This is an actual screenshot from the accounts. I'm doing all them trades. This is an actual picture. I'm not photoshopping this in real time, my friend. Actual photo. You saw, I'm making identical trades across the board in all of them. They're showing not so bullish enough. This was before I made the trades. Like this, I tweeted it even. This is before I made the trade. Then I made this short a second ago and put like another, what is it, 400 in each account. 300, 400, 400. Or this one was actually 600. This one was 400 and the bottom one was 100. So I've made like what, three or four different trades this morning. Yeah. I don't know which one this one, I don't know which one of the 5 it is. Let's just have fun. Let me just, because you're talking here, let me see which one that is. That's the middle one. So the one that you see on the screen right now is the middle one. Okay. So this is where it is in that order. Look at this. All right. You owe me $40. It's all, I guess this is ranked in order of amount of profit. I'm just kidding. You don't owe me $40. But yeah, so this one in the ranking was the one in the middle. Because what it is, it's ranking them in order. Because I have the highest profit one on the top. This one has switched positions because it's now the 3rd ranked one. This one might have been the bottom one. So they flip-flopped. And so, you know what I'm saying? I mean, no, I do not copy trade. Kulu, you know the answer to that. So since they're ranked in order of the most profit, this one is 3rd now, but it probably was 4th or 5th. And it moved up the list because it's ranked in order of highest to lowest. I don't know why I have it like that. It's just the way that it is. I click the screenshot. All right, so I'm feeling down today. Resilience is trying to heal itself, so let's kind of stay on this one. Now, I gained 1 confluence back that I could take a small long here on S&P, but the market doesn't die. We have 10 minutes until the Michigan numbers come out, so waiting for this. Waiting for this. I don't copy trade. I play with all the accounts. When the VIX is below triple B, I hit all the accounts at the same spot. When VIX is above triple B, then I build my position around the accounts. So I'm not feeling a lot of push to the short side today. Ratio is trying to push up, but it's still negative. We call that a -1. Okay. When monthly resilience is less than 0, that's a -2. So we're counting cards, right? So -2 is 2 flags. Every flag will step down my trade one size. So our size basis is normal, medium, small, and sit out. Most of your MHP long setups, let's see if I have any, like number 2 is going to be a normal if MRES is greater than 0, a medium if it's not. So it's a medium if it's not, already it's a medium. 1B is also a medium, same situation. So medium from here with ratio less than half, I'm going to cut it to a small. Okay. So theoretically speaking, I guess I could take a small here. But with Nasdaq resilience less than 0, which it is, and S&P resilience less than 0, the small becomes a sit out. So now we've used our position sizing rules, which we talked about in yesterday's boot camp, to convince myself to sit out on the long, and I'm not taking the long. You see that? See how easy that is? Feeling down, need a hug, Benny? I always need a hug. TradeFi has 35% off right now. 35% off until the end of the month. Load up on your TradeFis right now if you can. Enjoying your son's soccer trip in Barcelona this past week? Missed trading? Oh, well, I mean, I would love to be. Or Barca. Is that Barcelona or Barca? Where's Barca? Yeah. No need to be in a position going to U Michigan. You know, Jay knows this is a big number. The market is going to respond violently today to the Michigan numbers. Violent. Violent. Oh, so we have the HVAC guy here today, so we might have a guest on the stream. Hold on. No. Yeah, latest switching numbers really bad, really bad. So we felt the short setup today, pretty good. Anybody here trading? I'm flat right now, but anybody do a short, a long? Did y'all do anything today? What did y'all feel? I talked myself out of the long trade because we have enough confluence going away, and that's really the trick here. And now we're in an illiquidity pocket and SPY. Scalped a short, padded chance took a short. Oh, you guys are shorting too. Cool. Y'all are so smart. Short at the top made 23K. 23K! Look at that, my man. Y'all gotta love this free YouTube channel we got here. We gotta hang out with like-minded folks. Y'all are all super smart. Coin flip setup off this MHP. That's kind of the crazy part. Yeah, don't mess with you, Mish. This is gonna be a big deal. These numbers are big because they're gonna be factoring in people's expectation for inflation. The EU news gave it on silver platter. It really did. That was so easy this morning. Why the market went up on tariff concessions. Probably to make some room so they can fall in the Michigan numbers. Who knows? I shorted after you said you're done trading. LOL. Well, AJ's going to be the big winner today. Watch this market crash out. I'm looking forward to AJ posting his 40K win today. I think the market's gonna die out today. Let's find, while we're waiting, we need to get one more impact line on the S&P. So with Nasdaq, we already drew the 789 level. Let's find the S&P's version of that. Down in here. Pickle's having fun. We have the HVAC guy coming in. They're balancing our airflows. It gets really hot on this top floor with 2 streamers living here. And so the bottom floor is that about right? The bottom floor is like 65 degrees when we set the thermostat to 72. All right. Oh, wait. No, I'm on the wrong day. What am I doing? We're going to be down here somewhere. Ooh, we were right today. I love being right. And there she is. 56.79. Okay. So that was awesome. All right. You see, because you see how I talked myself into a short today. Paid out very well. $12,000. Not complaining. Ooh, ooh. Elite ETF traders can no longer purchase challenges. So any prop firm, Amanda, whenever you go live, removes you from buying challenges. This is the whole thing that you're not taught when it comes to prop firms. When you guys go to live, you are banned from the challenges. Live, and that's every prop firm will do that. TopStep does that now. It's part of it. They do that because you're banned. You've made too much money. You're too good. So they ban you from it. And they give you real money to trade with. It's both a blessing and a punishment at the same time. How long banned for with ETF? It's 3 years. That's how long I was banned for. I'm banned from the challenges as well. They give you real money to trade, but that's where you want to be. The real money trade. Better taxes, no rules, etc., etc. Every prop firm is different. Some of them are indefinitely, some of them for a certain number of years, whatever the case may be. Do I have 2 compressors? I don't know. That's uncharacteristic of me, Garrett, as you know, to not sit down and read every manual that's handed to me when I buy a house. Normally, I would do that. I'm like Tim the Toolman Taylor. I know how everything works and how to fix everything. But this is the first time I moved into a house that I was just absolutely dead sick when I moved in. I was so excited to read all the manuals of all my new gadgets, and I never did. I know there's going to be one day I'm going to go to the pool and I'm like reading how my refrigerator and how my oven works and all that. I found out that my oven now connects to Wi-Fi. And it's got all kind of thing. Like my oven at the front of the screen was like, press yes to update. And I was like, what world do we live in where you need to update your oven? Like, you know what I mean? For whatever it's worth. I think I guess there might be an app I could tell. Maybe there's a camera in the oven. Probably I can watch the bread cook. I don't know. I'm excited to read to figure out what kind of features we get on all these things though. But one thing I don't understand is I have one of these tray microwaves that comes out like this when you open it. It's like, and you can set the plate on it in the center. But I'm not used to microwaves that don't spin the food. So I don't know how it works to keep your food warm because everybody understands how a microwave works and why you have to spin the food. A microwave has really thick, fat radio waves that propagate through the box. I think it's like 2 peaks maybe. Like the waves are literally that big. That's why a microwave screen has little tiny holes in it that you can see through because the waves are so big they can't squeeze through those holes, right? And then so you have your plate in the middle and the peak is where the energy is touching the food. And so your food rotates around so that the peaks can hit. You know, maybe the peaks are a little smaller than that, but basically the peaks are like not uniform. And the food spins so that every point of your food is touching a peak or at one of those waves, right? So how does it cook your food if it's not rotating the food around? The waves must be rotating upstairs? Like, how does this work? What part of Houston do I live in? In the Memorial area. In the rich old money section. Where we're like the youngest people here. And we love it. It's nice to be able to turn off your oven from your car. Share. It is, right? It very much is. All right, DD ratio less than half. One could theoretically. Oh, here we go. Michigan numbers are out. What do we got? Let's not F with the Michigan numbers. Let's just watch the response. The 1-year inflation expectations going up, not good. 5-year going up, not good. Consumer expectations for March going down, not good. Consumer sentiment going down, not good. Again, we expected it to be bad. Now is the market going to respond off of that by rallying? Current conditions, somewhat okay. So in general, the Michigan numbers are expecting further inflation. So Fed is likely not to cut rates this year because of the tariffs. This is what that's telling me. The market's going to absolutely hate the fact that we don't get rate cuts this year. I'm almost betting we don't get rate cuts this year. When did I move out of Rice Village? Oh, man. 2021? 2022? Right after COVID. Like the year after COVID, maybe. I moved out of Rice Village, and I moved to Montrose for a little bit. And then IDOC and I got a house out in the Memorial area. Like an adult house. That was a long time ago, Bill. Rice Village. That was a cool area to live in, too. Yeah, so as Kaizen has said, whenever you get moved to live, which is what you want to do, it's not the sim to funded that you can't do the challenges. It's when you get moved to live. And every prop firm does it. You know, it's just a nature of the game. Typically, for the most part, it's you know, if you're too good, they're going to give you money to trade with and kind of remove you from the challenge. The challenge is for the newer traders, and you know, if they catch you being too good in the newer trader area, if you're slam dunking on all the 5-year-olds that are, you know, twice half as tall as you, you know, they're going to move you to the big boy leagues, big girl leagues. That's kind of how it usually is with the funded programs, and it's common. So it's, you know, in the ban, don't think of ban as a bad thing. Ban is a risk maneuvering metric for you. Imagine that they didn't do that. And imagine some simfluencer who's arbitrage trading both prop firms goes out there and wrecks the prop firm for $3-4 million. The prop firm goes under and nobody gets paid. The reason prop firms do that is it's a risk avoiding measure to preserve the effectiveness of the game for everybody, which you should be happy they do that, because prop firm arbitrage is a real thing. And it's very risky for the firms when single traders know how to game the system to make millions of bucks. It may be funny for you to read about that on social media, but it's not funny if you own the prop firm, because then things like fast track trading just goes under because they can't afford to pay everyone out. When you have bad risk management models, you know, for the firm, And they do it. So majority of them have shifted to the mode of once you go live, you can't play the sim game anymore. They all have different amounts that you can't participate in the eval games anymore. But everyone's shifting to that model because it's healthy for the firm and it's better for you as traders. You'd hate to be sitting there with $100,000 stored up waiting for a payout and then they can't pay you out because some goofy influencer goes out there and shorts one firm and longs another firm and gets $1 million payout from the one that wins, and then the other firm's struggling. You know what I mean? Thank you, Matt, for sharing. God bless. Well, God bless you too, Teo Strike. What do you want? Need those vents to run with run off Wi-Fi and open and close, adjust airflow to whatever area of the house you want. Do they have? I would assume they would have that at this stage. Wi-Fi based vents that would open and close. I'd love that. The one thing I hate about the vents closing though is that when they do close, they whistle. So have they made it to where you don't get choking on the flow? Make a little whistling sound. We don't want to see that. They basically create a certain type of orifice size that doesn't make whistling. Because I know whenever I try to close my vent a little bit, you can hear, you know what I mean, a little whistly sound. It's been 3 days sitting on 20K profit already in your XFA Top Step. Easy Bond. Nice, dude. Top Step reach out to you and they will close and monitor your account and would like to offer potentially a live account. Wait, they reached out to you and they will close your account first before they give you the live account? That's fishy. They're not giving you a live account. Said, here's a live account. By the way, we're closing the other one. They're like, we're going to close your, at least paying you out? That sounds a little weird. People have died doing wood burning with microwaves. Yeah, like microwaves are very dangerous things. You haven't got an update and turned into an air fryer one day? Oh, that's hilarious. Now, downloading air fryer program. Thanks, oven. Don't mention it. Yeah, Rice Village. Yeah, I used to live in the West U Rice Village area. I used to live, yeah, that was my first move when I left Pearland. I was there for a while. I lived in like a super bougie mid-rise for a couple years till I got my house. I loved it. You guys have Hanovers wherever you are. They're amazing, dude. It's like ultra bougie. But, and then COVID happened immediately once I moved there, and then I was kind of stuck there for a couple years because the houses went through the roof, and I was like, well, let's wait on that. Of all things, but I didn't not like. They're all Hanovers are gorgeous. They're like the top of the line when it comes to like a luxury apartment. 2 bedrooms run you like maybe like $5,000 a month. High rise, beautiful infinity pools, things like that. Nice. That was like 6 years ago. Every time I'm in a house, I'm like, man, apartments are nice. You get all the amenities. Every time I'm in an apartment, I'm like, man, houses are nice. You get all this freedom and space. Now I'm like, okay, I don't think I ever not want to have a house again. And now I enjoy ripping shit up and digging holes in the backyard. What line do I have in the ES chart? It's probably the gap fill. Let me double check. So market's selling off today, like we said, it probably would likely do. I don't see a white line on the ES chart, just the DD ratio. Sorry, DD band. Super easy setup today, guys. I was having a good time with this one. I'm gonna start putting some notes on here so y'all can see that. This red line is illiquidity pivot to the downside, and markets continue to fall. Is anybody here short right now and still short? Is my morning routine like the Saratoga water guy? Yeah, like I said, first thing I do is I wake up. I go stare in the mirror, slap myself in the face 3 times, go outside, stare into the sun, scratch my chest and howl. Ooh. Go to my swimming pool, lay there, come back, And then I go in front of my bathroom again and I cry in my hands for 30 minutes. And then I come here and I'm ready to trade. My awesome morning routine. And we thought today the market was going to crash out, didn't we? You have the same routine, so weird. It's normal. Yeah. I'm like the opposite of a werewolf, though. I howl at the sun, which is, it's a better kind of werewolf. I called it. I figured I did pretty good today. Left a runner. Share. Hey, did they get you set up, Share, by the way, with MyFunded? You got to get your account set up. A risk team will best decide when you're allowed to continue trading sim funded if you end up breaching your live account. Yeah, so according to Kaizen, it sounds like it is a malleable sort of thing that allows you to go back. That's kind of cool. So the risk, and you guys have to understand, we like to be honest about educating you guys because the prop firm model may not be fully understood by some of you. And, in the sim to funded world, it's not protected by the legalities of the exchange. So the firms like the kind of Wild West have to kind of be their own sheriff because there are people out there. There are a million ways to cheat the system. Okay. And they don't like to talk about it. So, but because they don't want to educate you on how to cheat the system, but there are people that cheat the system all the time. So they have to make sure that somebody isn't, and casinos do the same thing. You can't have card counters come in there and cheat their way into massive profits because the casino can fail for everybody. It's the same kind of model. And they're always having to deal with cheats. There's a ton of ways to cheat the system. I know a bunch of them. I don't do it, but I know a bunch of them because I'm smart and understand how this works. And, I hear stories. So you guys have to understand when they do move you to live or they do reduce your ability to trade the evals, lowering the risk. Don't see it as a bad thing. See it as that this makes sense because you'd hate to fly to Vegas on vacation and half the casino's doors are closed and you can't even go have fun for the weekend because they don't have any money because someone cheated them out of it. It ruins the fun for everyone. So they have to kind of have that same mentality. Does that make sense to you guys, right? It's not an evil thing. It's a casino model and casinos are fun. We all have fun when we play the casino, right? So it's kind of part of the game and be happy they have really strong risk models. For instance, prop firm arbitrage artists make millions of bucks cheating prop firms by trading them against each other. It costs a lot of money to do that, which is why you can't do that. If you're rich, you can become richer, though. And so they have to make sure that, they're allowing people who fairly play the game to continue to play the game. And if you're also really good at trading, they're just going to give you real money to trade with. You don't need to be trading with the house money anymore. With the sim money anymore. You can trade with the house money. Looks like falling to red line 56.79 is the target. All right, question. Everyone in chat, did anybody long today? That's my next question. Anybody long? Anybody long today? With all the signs. All the signs. Resilience negative, monthly resilience negative, VD less than half. Did anybody long today? Anybody long today? All right. The signs were a little wonky for a strong long pivot. There was a good long setup, bear zone, bull zone, every single time, liquidity pocket, right out the door. I was a little worried about that one. It's a rare event to see Matt short. Oh, yeah. So today after the stream, by the way, we're going to do our new Friday thing is we usually get together and game together. We played Call of Duty last time, but I streamed on Twitch. That was kind of fun. Streamed gaming on Twitch and hung out with some of you guys. Y'all want to do gaming again today after the stream? Ooh, ooh, ooh. There is the one pivot, if there is one, 56.79. That's it. I'll be over trading if I went and did anything else from here. Let's find out what we have lower than 789. NASDAQ. $256 is it? What about here? Okay, I'm doing a trick right now to find lower low targets. Anytime you're outside of the green bands, we have these things called red lines. They are illiquidity pivot is the name of it, the official name. Let's see if any of these qualify. I didn't do it when I should have. That still is okay. Oh no, that's why we didn't have them. What about the S&P? See how cool that is? We teach this to you in one of our classes, the red line, see how it's like right on the nose. How cool is that? Ooh, we possibly avoid a market crash today. Can't complain. Okay, we have two potentials. Ah, here we go. We need to back up a little bit. Back it up. There's one there. No, we never had one on the S&P. S&P did have one here. NASDAQ didn't, though. Okay. So let me show you guys. I'm finding lower pivots for the selling. Just the day before this, where NASDAQ will show its. And I do have one. 256. Okay. All right. So we got some lower targets in case this market continues. Now, this is the first balance point we have, if there is anything. And NASDAQ just clobbering through like it's not even there. God, we're so good at this today. I walked out the door and said we're going to feel like we're shorting right out the door. Love it. Love it, love it, love it. Okay, what is this price level here? Is it a gap fill? S&P. Let's go all the way back to there. What on earth is this line? That's not a gap fill. Oh, that was the contango midpoint. Okay, we don't even need that anymore. Man, we're so good at this. All right, let's mark it on the chart. 256, next pivot down, clone. Told you guys don't sleep on the Michigan numbers. I told you everything came out bad. Markets, you're learning something here, right? You guys learning how to be experts at reading the market? Did we explain clearly to you what the Michigan numbers represented? It's the probability that the Fed's going to raise or lower interest rates. And the probability is extremely high that with the tariffs, we're not getting any rate cuts at all this year. I'm betting that. And even though they say that we might get 2, I'm betting we might get 0. Trump keeps doing what he's doing. I don't think the Fed's going to act at all. Now, again, that's just my belief. The Michigan numbers coming out, extremely bad sentiment. Blood is on the streets. Blood is on streets today. The Apex finally get back to me. Yeah, I finally got my payout from Apex. So Apex is off the shit list. Rips lost 22K this morning. Long, oof. That sounds tough. Happens to everybody, though. That could have been me. Especially after MHP break on SPY. Right. Can you talk about why you had a gut feeling about the drop today? We opened below MHP. DD ratio came out bearish. We opened below MHP. DD ratio came out bearish. And my expectations with the Michigan numbers are going to be bearish. I forecasted the Michigan numbers will come out and show worsening conditions as the tariffs are finally being baked into it. The first thing I explained at the start of the stream. Does that make sense? Michigan numbers. Yep. Exactly. Matt, you nailed it. It was intuition on that. It wasn't just intuition like I feel like the price is coming down. It was intuition that the Michigan numbers are going to come out and the 1-year inflation expectation at minimum was going to be higher. But the fact that the 5-year is higher is even worse, right? The effect of the Michigan numbers, it's a survey that they look at the median price range on inflation. And I mean, if do you understand that the 5-year inflation number, I mean, can you see this right here? Right? My expectation was this. Look at the jump. Ridiculous, isn't it? Crazy. So my expectation was that it was going to be bad and reflect the tariffs. And this is what I teach you guys to do to try to get ahead of things. Right? My intuition was that's going to be. Don't sleep on the Umish, guys, because it's a very powerful number that we have seen lately, being very responsive in the market, very responsive. So do we understand the 5-year inflation expectation matches what's on the Fed dot plot, isn't it? Remember the Fed dot plot? You had that inconsistency where half of the members were thinking that, we had a split. Half the members thought that we should lower to about 50 basis points. The other half think that we should lower 100 basis point, 50 and then 100 over over the long haul. So the idea that the 5-year expectation is way through the roof, a lot of these people may move up to here. 2 camps in the Fed, and the tariffs are going to add to the inflation more than we're expecting, is what the Michigan numbers are telling you. Does this make sense, everybody? How's the inflation? It's not because the math checks out that would be exact. It's because we don't know, Pips, and you're nailed it. Like, we don't understand the effect of that. It's not just on the surface level. When you raise your price, we learned from COVID, when one person raises their price, everybody raises their price. That's where this is a little bit misunderstood. Why did COVID fall straight down? Because imagine this. Imagine that you are a person that has a car. Okay, I'm gonna draw it for you guys. This is a great way to understand it. It's a great question. Imagine you're a person that has a car. You probably don't have cars. And your car looks like this. It looks like a Jetsons car. And all of a sudden, you have a tire that's missing. Oh, my tire blew out. I need a new tire. So you go to the tire shop, and they go, well, yeah, I mean, we have tires, but we don't have tires right now. Because, there's rubber shortages. Well, why is there rubber shortages? Well, the factory that makes them can't get the rubber. The polybutadiene, they can't get it. Well, why? Well, because the people shipping it, they can't come as well. Why not? Well, because they have flat tires. Also, the truck that's supposed to deliver it has a flat tire. Right? And it can't even deliver the rubber to fix tires to fix your tire. And it goes in a big circle. And so everything went in a big circle. Like, hey, I need these parts. Well, we can't make the parts because we don't have the materials of the factory. We're not the materials. Well, because we don't have the oil to create the thing. Why don't we have the oil? Because the tanker can't come across. Well, why can't the tanker come across from China? Because the tanker needs to be repaired from parts that are made at this other factory that need oil to repair it. And you're just like, the spaghetti bowl of logistics. Do you guys ever hear see how that works, right? It's a spaghetti bowl. So if you raise prices and someone else raises prices and someone else raises prices because the demand is shifted suddenly, the amount of loops that you take to close out that loop where you find out where your bottleneck is can be huge. And so a company raises price. So, the supplier gets a tariff, they got to raise their prices, and then the company's got to raise their prices, and then you make money, and then you got to shop less somewhere else, and then companies are making less money there, and then they got to lower their price, and then they got to raise the same amount. What's up? I'm not in trade right now, but yeah. Let me sure hold on. Let me turn my camera off. Okay, guys, be right back. He can come in here. Oh, it's so weird with the camera gone. So the idea is that because you don't understand how deep things can be tied together, the uncertainty is where it is. Because it's not just like a company's going to raise their price and be done with it. What if a company has to raise their price and they're a supplier for another company, like auto parts, right? We are back. Hold up. Market's still being bad. God, I gotta love it today, man. Today was so good. We were so on point today with this. Can't even believe. I love being right. Oh, I love this stuff. Nasdaq smashing through red lines. Smashing through. Let's delete. Yes, smashing through red lines. Let's delete. Weren't we good at this? DD ratio is great. Greater market starting to flip bearish. We didn't even look at monthly maps today. SPY below MHP. All signs. Greater market bearish again. Ooh. Nice. Monthly maps are showing signs of bear market yesterday, if y'all remember correctly. And monthly maps kind of still in that same boat. We're in bear zone, illiquidity pockets, market's crazy, volatility's back. Let's double check triple B on VIX really quick. Make sure we are running right up to it. There's the level. 20.32 is the key level on VIX today. CAT is active. Oh, 100% CAT is active. Let's double check that level there. 4375 points in the S&P future. The market can be self-catalyzing at this point. And you guys know CAT is active on a straight run move that is not catalyzed by anything. So the Michigan numbers came in right about 9 o'clock here. So we're going to start moving on this. Now, while the Michigan numbers came out to be a wash on the actual price action, the market is selling anyway. So we're going to measure our anchor point from right here at the top. Make this a gray line and call this anchor point. You guys know the drill here. And if you remember from yesterday, risk interval on the S&P is 43.75. Oh, it is actually 43. So 43 points off of that. 57.11. 0.25 minus, oops, minus 43. 56, 68, 25. CAT active. 56, 68, 25. Catalyst is active, you guys. I think we usually use a purple line for CAT active. Okay, we know the drill. Actually, I think we use a pink line, don't we? It's not really. We run out of colors here. Let's go ahead and use a darker pinky purple. All right. Cat active, cat active. Let everybody in the Discord know this. Catalyst active, catalyst active, catalyst active. No trading, automatic sit out rules. These are part of our risk management suite of rules. The automatic sit out, catalyst active below here. Okay. Y'all know the rules. Just move this out of the way for the photo op. A little measuring tool. Let's get this out of the way here. So you guys like, right, the risk management rules that we have here? Second to none. Second to none. This is the best I do. Ever since I created this just for myself to use, this is by far the best time I've ever had trading. I've had such a fun experience seeing the market for what it is, avoiding the shit. Yeah, somebody said influencers blowing up today. Happen all the time. It's purple. You drew your anchor from 9:51 time. Oh, you mean from 8:51? So, so one could effectively consider this as part of the move, but I'm going to start it from here because this is where the mechanism started moving. This move was kind of squashed when you retrace. Like once you get that, there's like no open red line there. So if you start at 51, which is here, you have the impact line is about right there, but this is where you have a clear impact with no, it's still there. Like if I show you what you did, which is not incorrect to try to measure from there, you can see when the volatility expands the most, which is what you're looking for, that first move down, you can see that we returned to the middle. So the red line was squashed. So when there's no red line, you can kind of remove that as the potential for the anchor point. I mean, here, dude, it just falls straight down. So we're kind of like right there at the DD band for that red line. It's a great spot. Catalyst active. When you have catalyst active, the market can get extremely gross from here. I'm talking it speeds up. So once your cat is active, you're no longer going to be trading like I'm in a linear fashion. You're going to get this kind of weird. Let me show you guys how this works. This is crazy. So if I were to draw like a trend line like this, when a cat is active, what ends up happening is that the market can speed up, as we talked about yesterday in the classes, and start to curve away from it. Do y'all see that? So the caution that we take when a cat is active is that the market is no longer falling in a linear fashion. It's going to likely speed up. So let me show you the speeding up of it. Right? We're going to draw some lows as soon as it starts bouncing. I'm just kind of drawing the path of about where, you see how there's kind of like a trend line here? Catalyst active will likely push faster down here. So maybe day 2 of the boot camp, you guys get to experience your first catalyst. If you are taking our boot camp, by the way, are you enjoying the risk management portion of things? I'm curious if you guys are having fun with that. Rocket Scooter, second to none. Yeah. Lena. Is it Lena or Lena? By the way. Let me say that right. Classroom baseball is good. I'm glad. Ooh. Is this Asiago bread? Ooh, that's delightful. I had better breakfast today. Asiago bread. So, is it, okay, I forgot which one I asked. The second one, first one, now I'm just confused. Lena or Lena? Does it rhyme with hyena? Or does it rhyme with Lena? Like linen with an A? Ah, Lena. Cool. Gotcha. Ooh. Oh, so much fun, you guys. Good day, good day, good day. Don't forget, Tradeify is having a 35% off today. In 20 minutes, we'll be having our ETF giveaway, you guys. Boy, Catalyst is active, sitting out. Doesn't it feel great to sit out? Is Jay around today? I saw Jay earlier. We need the J levels, don't we? Jay, where's your levels? Jay, wake up. We longing yet? No, 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 no. First of all, we don't do anything. I'm not longing with Catalyst active. Catalyst active is an automatic sit out. Automatic sit out. That's the rule. From our risk management, automatic sit out, don't play. I made 12,000 bucks in the first 10 minutes. I was done of the day. I'm up. I'm good. I have no desire to fight an active catalyst in the market. So we have it in S&P. We've been looking at it in NASDAQ as well. Kind of the same boat. Market open, dumped. DD bands have broken. I mean, we plowed right through these things. Nothing to say about this other than we're going to let the market sell off. Okay. Active red line dead, active red line dead. We do have a possible bounce point of 57.41, but not even try. Like this is the VIX is going through the roof. VIX is tapping this triple B level. If we get back above it, then the market's going to continue to sell off and try to find bottom. So this is by far the one cutoff point, 2032, which is called the backwardation midpoint. We break above this on VIX. We're back to trading like we were last month with the choppiness and breaking pivots. And it's going to be nightmarish again, right? It'd be kind of be in a terrible sort of environment again. Close out your shorts. 15K. Holy shit, AP. There you go. There you go. So how'd you guys do today? Traders, how'd you do? And if you took a small long, let me tell you, if you took a small long and got squeezed out and you just are like, I'm done with the market today, be happy. Be happy if you got that too. Be unhappy if you're holding a long and still upside down and sweating it out. If you're like, I took an attempt at a long, it didn't work out, I stopped out the small loss, and then you just sit back and let the market fall and just kind of like, yeah, I took my loss, I'm done. This is a market, it's you will be so happy that you're done with. No revenge trading, right? Bad day. Green, green, bad day, doubled your small account. Glad you're green. Small loss, better than big loss. Green. Shorts at MHP first leg and then short after Michigan. AP, got it. 9.7K gamma. Nice, nice, nice. Fantastic, guys. NQ cat line, let's do it. Good call, good call. Right, so even if you had a bad day or a small bad day, it's like whatever it is. If you maybe tried to long at some pivot or something and you took your small loss and got out of the way, this is a great time to kind of like, not take too much risk when markets are like this. Let's figure out this move on NASDAQ. So the Michigan numbers on NASDAQ might be in an even better spot. Where's my little measuring tool here? Oh, measuring tool. Oh, there you are. There you are. There he is. Let's go. Come on. Pull out the old handy dandy ruler here. Let's see where this is. This is a red line. Maybe I should make it red and green, or red. So, yep, no impact from there. We'll measure from the same spot. If that is the one. Okay, bye-bye. Don't need you anymore, but we're going to go from 19,867. Minus the number in the platform, 161.75. 19,705. When a catalyst is active, just be better safe than sorry. It's kind of the best policy that we have here. And you learn, we have a whole class on this in the boot camp. But automatic sit out. The VIX exponentially goes up. The VVIX goes straight up and a catalyst is active. And you're going to overshoot pivots and the market's going to curve and could fall faster and get choppier faster. Not a time to be a hero. And as I just told you that I'm looking at the screen, VVIX is going to go straight up. That's normal. VIX is going to be moving higher. And the S&P is going to exponentially widen, meaning that anything can happen. It can rally and do that. It can get wider on the move. It can go this and then go faster and then this and then faster, right? Because catalysts can curve how fast it would fall. The policy is better safe than sorry. This is the first attempt at a rebound and we don't know what it can do. It can do this. And the fact that we've proven to you that curvature happens when a cat is active, you don't want to be caught up in that. So it's an automatic sit out roll straight out the door. If I had lost $10,000 today and I was still in a trade, I would close out at a $10,000 loss. So it doesn't turn into a 50K loss. I can't give you guys investment advice, but heed my warning. Catalyst is peak irrationality, peak randomness. You will be fucked no matter what you try to do from here. J with this J level at 19311. Tesla DL 1K got stopped out by 5 points and NQ went up 100 points. Oh, there you go. Not bad. I mean, you could have been much worse. Past 50K Apex, happy, healthy, you, awesome. Disco lost a small amount in the cash account, 2 greens and prop firm. So Disco, let's talk about your situation. How do you feel? This is Disco's getting it. Like, how do you feel? Market's collapsing and you took a small loss in the cash account. Small loss, right? You picked the trade and you don't always get every trade right and you picked it wrong, but you escaped with a small loss. How do you feel? Like, the whole point is that when you get it wrong and you get it wrong small and you're back away, you're good, right? 7 more likes, pump it, pump it. We didn't get 500 today though. We're gonna do the ETF giveaway though, right? Pass the tops up combine, nice, 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 nice. King of the Jam traded the continuation Green Day. Cool, cool. But didn't work out, probably big loss. First recovered a small win. Okay, not bad. Takes longer to be cautious. Did Rips lose 80K today? Is that even actually real money? These guys out there all just doing prop firm stuff. I heard that Rips blew up today. It happens. It happens to the best of us. No shade being thrown. It's part of the game. You can't win them all. So what you're saying is there's a chance. Another rebound to the downside. The market's completely irrational and unpredictable. From here, we just got to sit back and wait. You picked the right direction, but was just burned out the other day, so you bailed, got down your props, saying it was correct. Protecting your real capital, that's the smart decision you made. That's why I was commenting on it. Because, you took a small loss in your real, and even though you carried over what I like to call psychological hysteresis, there's some residual feeling from the other day. And even if you feel uncomfortable, just back away, let that feeling dissipate. You don't want to have that plaguing your decision. But you did try to take it and you're like, no risk prop accounts, which is basically like no loss for the most part, minimum loss to you. So the fact is that you thought you were right, but you lowered your risk by moving from live to prop account. It's a very smart decision. I mean, that's a good risk management decision, bro. Like, honestly, I'm very proud of you for doing that. You felt weird because the previous day shocked you. And that's happened in trading. Like, you take a big loss. Remember, I took a big loss like 2 days ago, and yesterday I had a big win to make it back. Up to the point that when I take a big loss, I don't come back the next day afraid to act in the market. Trust me when I say I've blown up enough in my career, getting started especially, that the feeling of just, don't care anymore. I know what it feels like. It doesn't shock me. But some of you may be shocked. You take a big loss and then you're timid the next day. It's okay. Anytime you feel off, just trim your risk or risk or risk down. There's nothing against that. You need to be able to trade without the feeling of a previous day still lingering. Who's posting the wins on Twitter? I was. I posted mine. They'll still get their affiliate payouts. I mean, that's the best part, right? When you win, and people come and watch you trade. When you lose, everyone was following you, and then they lose, and then they go re-up their prop firm. It's an amazing way to make free money with a YouTube channel. Now, I don't copy trade. As you see, all of my accounts are always slightly different. I trade them differently. I mean, I make the same trades, but I trade them individually. Individually trade. So as markets are falling to a pivot, like today, as markets is rising to a pivot, I shorted in one, market went up, shorted another, market went up, shorted another. And so as I'm trading my short pivots today, I'm getting in all the accounts around here. They're going to have different values. These two are slightly bigger because I shorted overnight off of MHP in just 2 of the accounts. So in general, they're all going to be roughly $2,000 today on the live stream. And then these two made $2,000 extra, give or take, or $1,000 to $2,000 extra overnight. They're going to be slightly different because I'm not doing max risk because I actually care that you guys aren't copy trading. I train you and teach you. If I taught you guys to copy trade, it was like, no, copy trade, it's so much easier. My affiliate bucks would go up like 10x. I swear to God, you guys would blow up all the time. I could easily make free money by being completely dishonest about that. Oh, guys, max risk, let's go. Have you guys re-up Apex accounts every day. I can make 10K a day in affiliate payouts. Oh, yeah. But we try to teach you guys how to beat the system. I'm not trying to pad my wallet with affiliate bucks. I take the affiliate money and do giveaways for you guys. I go buy accounts for y'all. Still on the short side, since the green line, run the money. Let's go, baby. Apex gives free evals to influencers. Yeah. You do. They all do. They all get free evals. I get free evals from all of them. Made 600 with micros. That was enough. Hey, keep it small. Looks like we're going to have a red monthly candle. It's very possible that we're going to have a red monthly candle. Very much so. You watch the guy who rips volume profiles on that very dangerous strategy, strong trends, 100% path to being broke. I've watched him trade a couple times. I would say he's good at risk management when he's a professional poker player. He's got that down packed. His risk management's on point, but his trading strategy's a little weak. He could use Rocket Scooter in his life. Somebody needs to tell him he needs some Rocket Scooter in his life. He needs better entry and exit methods. But other than that, Rips is a great risk manager. In general, it's not bad. But you need both parts, right? You need a good trade plan strategy. You need a good risk management strategy. All because of me. Thank you. Well, appreciate it, man. I like teaching you guys the ropes here. It makes me feel happy that I got a bunch of people that tell me, like, you know what? I get it now. I feel like I'm trading less. I'm lowering my risk. Right now, before you guys came to the stream, half of you right now will be looking at this and being like, how do I get in on this? Oh, man, maybe can I short from here? Maybe market's going to crash. Oh, you know what? It dipped. Maybe I could buy the dip, right? And here I am safely on the sidelines. Made some money, safely on the sidelines, chilling out. It's the least sexy thing to be doing on a trading stream, to be sitting out. But I perform better than any 2 YouTubers, maybe 3, put together. Literally, it's not even a fair contest to have a race to see who's the better YouTuber. By far. And that's my ego talking, but it's real. I mean, everyone out there knows that too. That's why nobody picks on me. They all know I'm the best. My numbers are consistent. They always have been. Bull market, bear market. My consistency. In this bear market, my win rate was 70%. 70%. Isn't that crazy? that crazy? 70%. It hasn't updated with today's trades, but it's actually 72%. I'm lucky and fortunate at the same time, but also I earned it. I have a genuine edge. That's the difference. Like, very few people have a genuine edge, and very few people that do, on top of that, would even go out there and show it off on a YouTube stream. It's very different. I have a mathematical edge, and that makes me different. I'm one of the few people that has that. It's kind of different. So I'm not just using the same old tools and tricks. I've got a genuine edge. Monthly hedge pressure resistance today was a 90% setup. Some of the odds are very high in some of the setups when everything lines up. Today, pretty much everything kind of lined up. So it's good. You and Al Brooks have been the two best traders. I've heard of good things about Al. I've never really seen any of Al's content or read any of his books or whatever, but I hear a lot about him. I think Tradeify 150 is better than 50K. His profit target drawdown is the same, but the payout is less and the first payout is higher. Right. So when you're Rich, you're asking the Rich James. I love it. I would say Rick James. So you go around and tell people like, I'm Rich James, bitch. Is that the joke of the name? Or is your name really Rich or your name really James? Anyways, you're thinking the right question. When you're pricing out a prop firm, you should do what you did. It is the ratio of the profit target to drawdown that you need to do. So he's asking the right question. So when you're saying is which prop firm, which size account is better, right? You need to look at the profit target to drawdown ratio and see if they're all the same. The other thing is that you're gonna have to trade discreetly and ask yourself, if you can only trade one contract as the lowest denomination you can go, is one contract too much risk for that account? And if so, do you have to go to micros? And if you do have to go to micros, are you gonna have to pay commissions for the micros? Somehow, usually for me, the reason I pick the most expensive account is so I can trade the denomination of minis. So that in the 150K accounts, my small trade happens to, we calculated yesterday in the boot camp, was about one contract, right? So if I were to trade anything less, then you're trading micros. If they do pseudo commissions in these things, the micros might cost you a little bit more. It'd be harder to manage. So it all has to do with how you want to do that as well. Now, between the two of them, usually the payout is higher. As long as the ratio is the same, the accounts are the same. Then the question is, do you just want to pay more for a higher payout? And then you do how much extra to pay more to get the higher payout. Is it worth it to you? The odds are you're not going to get a payout. That's the thing. If you think about it like this, the odds are big that you don't get a payout. So the amount of payout shouldn't factor into your decision. It's the same question of, should I buy one lottery ticket or two lottery tickets? Well, the odds are you're not going to win the lottery. So the extra dollar you spend might up your chances a little bit, but it's not really going to happen if you don't get the payout. You get what I'm saying? So in most people's circumstances, the cheaper ones tend to be the way they go, but then you have to trade micros if you follow our risk model. So in all honesty, the reason I trade the bigger ones is so I don't have to trade micros. That's a great question. The fact that you did it, Rich, that way is I'm very, I'm impressed. Proud of you. Because that's exactly what you need to do. You need to put them like by like and find out, is one of them actually better than the other? Two guns scale down from a loss and up ahead. Nice. And Patty, Matt has the NQ cat active line. Oh yeah, Patty, was the cat level on NQ? 19705. It's on the screen. It's purple. You can see it. Cocaine is a wonderful drug. Before Rocket Scooter Edge, did you have a usual learning curve of retail traders, like losing for 2 years? 5 years, Chris. It took me about 5 years to finally get ahead as what I would say profitable enough to never go back to work. About 5 years. I was making money pretty quickly, but I was not keeping it. I was making money and then losing it fast, and making money and losing it fast. And I was really, before I created the risk interval, which is part of these DD bands, nothing that I had was an actual edge. The risk interval was the first legitimate edge that I had. And I made that in 2016, 2015, 2016. And once I did, it was like, there's consistency here. And then I built the whole framework of Rocket Scooter off of that particular mentality. Let's find things that are consistent in the market and exploit them. Risk interval is an exploit of margin requirements and CME span program. And so I dove into other things. The yellow line you see on my screen, which when we have one, is the margin buffer limit. We turn the actual machine into trading indicators, which is kind of neat. The actual exchange's machine, its own program. Peter, pass 3 trade buys today. How low do I think NQ is going? That's the thing. You can always easily figure out how high something, you can't ever easily predict how far chaos is going to ensue. All right, you got the number, Patty. Okay, cool. So how low do I think NQ is going to go? The real answer, let me ask the question here and let's see. I'm going to type in something. Okay, so let's poll the group. How low, remember, this is a trick question, or maybe not. It's a loaded question. It may just be a simple question, but it may have more to it. How low does NASDAQ go today, traders? I'm going to press enter so you know I'm not copying your answers. After everybody says something, I'm going to push enter, and you can see what my thoughts are. How low does it go in this environment? Could we guess on how far that it goes? You ready? My answer in 5, 4, 3, 2, 1. There's my answer. Read that answer and tell me if you thought the same thing. How low does it go? I don't really care. I don't know. Don't care. Not going to try to guess. I'm sitting out, but I will chime in tomorrow, and tomorrow's a trading day. Now, I will care if we reclaim the CAD active line. If we reclaim here, then I'm going to find some long setups if the market gets good. But when the market is absolute ass like this, it's good practice to not care. Not just that you don't know, and it's not laziness, or it's not like it's strategic avoidance. I want you guys all say it with me. Say it to your monitor, strategic avoidance, which means I'm avoiding it, and I'm avoiding even thinking about it. You can't guess, as Dominic said, because you can't guess, you can't know. It's called being agnostic. You guys heard the word agnostic in a religious context or scientific context? Agnostic means you can't make a decision because you don't know. When people ask the debate, is God real? And agnostics will say, well, because we can't know, we can't pick a side. So logically, it's a logic argument, which makes sense. You don't know, so you don't guess. So in this type of environment, it's the same kind of philosophy. You don't know, so don't even try to guess. If you try to guess, you're formulating a bias based on something. Like a nuclear bomb has just went off, and you're like, maybe I can buy that house over there, because it might not burn down as the fire's spreading. Well, why don't you wait till tomorrow when the fire's no longer spreading, and then contemplate if that house is still standing? And this is the mentality you have when a CAD is active. The automatic sit-out rules are telling you there's a fire burning, and it would be impossible to guess how far the fire spreads. So the first response that I always have is, how low do you think it goes? I don't care. Strategic avoidance. It's not being lazy. If I start trying to calculate, which is what you guys normally do, okay, you know what? Let me get out a chart, and let me go, I love this question, because in a catalyst, the answer is you shouldn't care. You shouldn't even pay attention to it. I'm going to get this out. I'm going to go down here, and I'm going to say, you know what? Let me load up some charts. Okay, the 5 minutes not going to work. Maybe the hour. Can I find some support, some resistances, somewhere to try to see where it goes to? And then I used to say, I used to try to do that, and I would never guess it right. I might get lucky. It could be any one of these targets today. But once I trigger my sit-out rule, I try to not care. Because if I do care, I'm going to convince myself is, you know what? Maybe I'll take a long here. Let me just take a shot at that. And then when I stand back and listen to myself and go, what was my rationale? Maybe I'll take a shot at that. Then I say, wow, Matt, you sound like an idiot. That was your trade plan? Maybe I'll take a shot at that. That kind of looks good. That kind of looks good. Is that worth me investing my money? And then you teach yourself, how about the better solution is I don't even care. If I start trying to analyze this, I'm going to start leaning into the direction of trying to convince myself to do something. Does that make sense? I love that question. I'm glad you asked it. I always like to turn everybody's lesson into a question. We need to do the giveaway in a little bit. When markets are irrational, purposefully don't care. because you're trend fitting, curve fitting. You're going to make yourself do something. This is a great lesson. Does this make sense to everybody? Strategic avoidance even comes down to the point of not trying to see how far does it go. You know what I'm going to do? I'm just going to not care. And when I come back tomorrow, it's going to be a whole new setup. And so the best part about not caring is that I don't have any temptation from the market to act. The part that makes me better than other people out there that do this that you watch is here. The screen gives me the edge, but the avoidance, like the mental game is something that you forge a little bit over time, baby. You can't wake up and be like, I'm doing it right. You feel it. I feel like if I start caring about this, I'm going to convince myself to walk out into the middle of a fire and start looking at houses. You know what? Maybe this does look, oh, there is a support there. Okay, let me maybe guess it along like that. I've learned over the years is there's no such thing as missing out. You'll never miss out on something. You won't ever miss out. Watch this. If the market were to fall all the way to here and then rally right there, I'm not going to miss out on the bull run. I'll long right there and make a ton of money on the way up. I don't need to get the first half of, like, I'm standing there, the wall of fire is coming towards me, and I'm at the front door of this house I want to buy, and be like, you know, I'm going to buy it and hope that the fire doesn't burn this house down. Get it? You see what I'm saying? Once the fire is snuffed out, then I make the decision. And catalyst will last all day or until we re-breach the catalyst active line on the top. So this is okay. This is sit out. You guys all got it, right? If you automatically sit out like this, you will feel like you have power as a trader. Power. Nothing is going to make me push this button and buy a single thing today. I'm beating Wall Street. I have control. You get what I'm saying? Turn your sprinklers on. Yeah. Oh yeah, dude. What? Who was? There was the person in California. Who was it that turned their sprinklers on, and her house survived? You guys remember? One of the celebrities. I remember reading about it. You turn her. Not even an Arby's sandwich. You can buy an Arby's sandwich, but that's it. Jennifer Aniston. Maybe it was Jennifer Aniston. I think so. I remember reading about it. She had like sprinklers all around the house that put out fires, and has the Ichimoku cloud. Yeah, exactly right. Given the potential acceleration, there's a reason you throw one micro and let it ride. So you could, but the idea is that consistency is what I aim for. Yes, I could. I could throw in a micro and let it ride. I can make $1,000 or $2,000 off the micro. I could also lose $1,000 or $2,000 off the micro. Because the market's irrational and I don't have a very solid view of the probability of that going, I don't like to take it. You're right, because that's not a terrible idea, Ghost My Light, not a terrible idea at all. But the idea is that it's a coin flip. And now when you're reduced to like 50-50, it doesn't sound like a trade I want to take. All of my trades I try to make sure are like 60 to 90% probable. I've learned over the years that I need to side with the odds of my strategy rather than to pick the direction and let it ride. I've made my career off of 10 and 15 point moves in the S&P, off of 5 and 10 minute scalps. I don't feel like I'm missing out on a bigger move, although it's not a terrible strategy if you like to trade that way. The idea that you said put in a micro and let it ride, you understand that it's a coin flip and your certainty is low, and therefore you're trading a micro. Not a bad idea, by the way. The fact that you're lowering your risk because your uncertainty is high is probably a professional decision. I'm very proud of you for saying that. But for me, the goal is not to do that in my style. My style, I want the odds to stack in my favor every time I put my money down. You get what I'm saying? So the feeling of I need to do something, I'm a master of that emotion. Weak emotional state. If you're weak with your emotions, you'll be weak with everything. This is like a military thing. That's why they train you not to be weak with emotions. If you are weak emotionally, that's the worst kind of weakness you can have. You outwardly show your emotions, outwardly show anger, outwardly show frustration. That's an emotionally weak person. You'll be weak in everything you do. Gambling your money can afford no weakness. Okay. I'm in control. I'm the master of this area. So I'm like, I don't feel the need like, oh man, I'm going to miss out, right? If I even had lost 10K, here's the thing. I've made money, right? And it looks good. I've made money. But even if I would have lost money, that's where the emotion's dangerous. Oh, I'm down 20K. I got to make it back. Okay, where's the next trade, right? You see how your mind is in a different place at that point? You might say, oh, it's easy to sit out because you made money. But I would do the same thing if I lost. Had I lost 20K, I wouldn't be sitting here saying, I got to make it back. Those emotions are dangerous. And so if I lost money, I'd be like, thank God I'm not losing more. And that's where you need to be. I love this lesson. It's my favorite. Emotions are hard in trading world. But we give you like on a platter, silver platter, automatic sit out rules, which means the market is completely random and it's like you're not gonna be able to detect. All your indicators are gonna fail no matter what you do. Day trading Matt, how'd you come up with the 19705 line? It is one risk interval off the anchor point. We can learn that in the Catalyst class in the boot camp. It's a whole lesson. I'm not going to go through it today, but you'll learn it at some point. Please verify the form. Hold on. Affiliate code, coupon code, product. We don't need. Very nice. I have to approve some mock-ups really quick. Commission percentage, email, commission percentage. Auto upgrade discount. Auto after X days. Okay, very nice. Form is good. So we're amping up our affiliate program. Let me show you guys one of my mock-ups that is now a. So you guys are in the beta or playing with the beta right now on the affiliate program. We have an affiliate program we're making with the Rocket Scooter. This is the new form that's coming out. It's not released yet, but this is the new form. So we can add affiliate. You guys will get a custom coupon code specific for a certain product that gives a discount on a product. It's a per product affiliate now. We could also do auto upgrades. So we can create custom deals for you and your friends. Like we can say, hey, as an affiliate, we'll let your friends try for 1 month free or something. And then we can program that 1 month free, the auto upgrades, all that. Market's pushing right. It's random, right? You're thinking if I would have put a contract in short and let it ride, I just got a little bit of drawdown. 50, 60 points of drawdown in NASDAQ. You see how when a catalyst is active, the market is absolutely random and just kind of dumb. Can anyone have predicted this massive volume spike that came out of nowhere? No, right? And that's why sitting out's the best policy. But if you have faith that it'll go lower, Chris M has faith. You said a prayer. Market is a mystery, and you believe it's going to go lower. Faith in the markets is the worst kind of thing to put your faith in. I know Chris was just joking. But if you believe it's going lower and you want to plant and go, it's called commit to trade. Commit to a trade. Find a volume pivot that you can find, pick your trade, and set your risk and reward. Elevated volatility, look for the largest candle and the 1 minute candles in the last 60 minutes to find your expected volatility, and that should be your stop loss. Plant the contract, that's your stop loss. Let the micro ride. Make sure your R&R is greater than 1. You got to find a lower target. And not, again, committing to the trade is fine. But in this environment, I just don't do it. Sitting out's the best policy because it teaches me to sit out under all environments, whether I made money, lost money, way up, way down. My win doesn't get bigger. My loss doesn't get worse. I'm in control. Market's crazy. And look at this. The direction's going to be random and choppy from here. Today, where's that option strategy would have paid big? Yeah, right? Who was it yesterday that had the option straddle strategy? Did you buy a straddle at the lower DD band and did it pay out really well? Because that would have been a great. If I tried creating a strategy that captures large swings, I haven't. But I do have an idea on how I can use monthly maps in combination with like hedge pressure and monthly hedge pressure to create longer term plays off of reversals. Does it go down low all the way to the flow? That's where it goes. All the way to the flow. So the air conditioner guy, so we have dampers, right? We have 3 stages in our house, 3 different sets of dampers that go to different zones in the house. According to here, now I need to do some research, but the damper, I think, is on a I think it's like on a motorized thing. You showed me some pictures. I haven't looked at it yet, but I think what happens is that the damper moves open and close based on a motor. All right, I'm going to put a gear on here. Electric motor that just spins it open and spins it closed. What he said is that they're not closing all the way. And he was doing some things up there and saying that the motor wasn't closing the damper all the way. And I thought anything that's electrical, I was like, is this thing pneumatic or is it electrical? Like, what's closing the damper? He's like, it's electrical. Okay. So the damper is what allows certain zones to open more or less. If for some reason he wasn't able to get them to close 100%, and I was like, well, can't you recalibrate the actuator? Any of my engineers in here or electric guys in here? Anything about HVAC? I don't know much, but I'm thinking like an engineer. Wouldn't you be able to, there's an actuator that takes the signal and then turns the thing amount with the signal. Can't you program the actuator if it's actually working? Wouldn't it just mean you just recalibrate it so that that same current closes the thing? Or is it damaged? Do I need to replace it? You know what I mean? Electric motor operated dampers. Like you would think that you can go in and digitally program them because it's just it's not an I to P, it's a current to, it's not pneumatic, it's an electrical device. So you basically get the current comes in at X amount of milliamps that comes into the motor. The motor just spins to a certain degree and then it stops based on the signal it's getting, right? I'm just gonna buy a new house, fuck it. We're just gonna give away. Yeah, let's do the giveaway, guys. You should be able to reprogram that, right? So anyways, we're gonna get the original. This is what we do. Maybe just the seal got compressed over time. Yeah, it's a brand new house, so that's the thing. I don't know. With some cars, actuators are done based on time. If the gears break somewhere on it, it would open and close all the way again. Right, and so I'm thinking it could be damaged, right? So either case, iDoc's freezing her butt off downstairs because the upstairs gets so hot because of me. I mean, I'm hot. I'm a hot guy. It gets so hot because all the computers up here. And so no matter how we set the thermostat, it's like 65 degrees downstairs while it's 72 up here. And I have to keep the air running because it gets hot in here if I don't. All right, y'all. You ready to do today's giveaway? Today's giveaway brought to you by Elite Trader Funding. Everyday giveaway. Everyday giveaway. Once we get consistently having 500 people consistently, we'll start giving away bigger prizes, bigger rocket scooter prizes. Like I'll buy more accounts and get more accounts and give you guys more stuff. So as we get bigger, but at least we're going to give away at least one account every day. ETF, you know the drill. You know the drill. With hedge pressure, resilience, supporting the bull zone. Everything rocket scooter. I don't even know the lyrics. What everything is all you know. I think that's what it is. Yep. So does everyone understand, like when we have two automatic sit-out rules, one was the catalyst is active, one when VIX breaks a risk interval move to the upside. Both of those are automatic sit-outs. Automatic sit-outs are good for your soul. When you are in control as a trader, you are in control as a trader. There's power to those words. Power to those words. Being in control is something you lack. This is the easiest way to start building discipline for yourself. Easiest way. What do I think about ETF rules? ETF rules are some of the hardest rules in the business. I'm not going to lie. Their active trading day minimum profit rule is ridiculous. It's their way of having consistency. They're taking a unique spin on the consistency rule. And Tradeify does have a consistency rule, and they all do. You just have to think about it differently. ETF's approach is that if you make too much, your minimum that you have to make a count becomes higher. So it's to prevent you from flipping the account, which may or might be something that you like, but it's a new take on consistency. It's the same thing. You can't win too. Consistency is all about you can't win too big and you can't win too small, or you can't win too big in consistency. And when you win too big, you are punished in some way. With Tradeify, if you win too big, you got to just trade more days, right, to hit your target. With ETF, when you win too big, your days just have to be bigger going forward. You don't have to necessarily win more days. So everybody has the same approach to consistency. And the no DCA is tough because that's our jam. Right. Again, their rules are their rules. I know for a fact, and I love them to death. And they're a great company, and they come out with some good ideas. If they were to revamp their rules, they would become insanely more popular. They are not preferred because of the rules. Everything else about them is great. They pay out. They're amazing. They have great customer service, great team, great support. But their rules are harder. But they're also cheaper. So in the bare bones of all of these prop firms, that is what you get. Cheaper firm, harder rules is the name of the game. You get 80 and 90% off sales because the rules are hard. Apex, the rules are hard. Trailing drawdown rules are hard. You guys get it, right? You have to think about it like the risk model perspective. Yes, it's harder, but it costs less. So if your appetite is you'd rather pay more for easier rules, let them know that. They do have an end of the day drawdown account, by the way, if you want to pay more to get rid of rules. But even so, the no DCA rule is kind of tough. Yes, I know. You can't add to a losing position. According to them, they said you can't. They got to revamp those rules. I think they will at some point. The rules are kind of lagging behind the competitors, but they also have solid risk model, which is also kind of nice. Like they're the least likely to go belly up with more stringent rules. But again, as a trader, you are giving a bonus that the harder it is, the cheaper it is, and that's kind of the way the cookie crumbles. And I've been saying that all morning because we watched Bruce Almighty last night, and that's the way the cookie crumbles. If you add to a losing position, you're out. For the most part, if you DCA, if you add to a position while it's red and it's significant add, a significant loss, you're usually punished. If like your payout's denied until the next round. If you buy and then buy again at like a point or two difference, they're usually pretty lenient in my experience with prop firms. How's resilience calculated? Resilience looks at every single stock in the index across the redistribution zone, which is a space between their open and close. Okay, stock market opens here, closes here, open here, whatever. We gap up, gap down. The middle is called half gap. We look at every single stock inside of its redistribution zone. So RDZ is this entire zone, okay? It's the difference, the space between the gap, between the open and close. We look at every stock in the S&P 500. And if every stock is exactly at the middle, let's just say like this is Apple, this is Amazon, and then so on, plus all of them, plus 500, 400, 502 503 companies. There are 500. There are 505 tickers in the S&P 500. Man, if you guys knew that. Pop quiz. Do you know why that is? How can the S&P 500 have 505 tickers? Does anybody know that trivia question? But there's only 500 companies. Anybody know? Yep. That's right. Different class. Yep, exactly. There are different types of common stock for certain companies. Google, for instance, yeah. Class A, Class B shares, things like this. Yes, correct. 500 companies, but some companies have 2 different kinds of shares that are also counted in the S&P 500 aggregate. Good job. You guys are smart. All right. So what we do with resilience is we take all the tickers and we look at where they are relative to the zone. We know there's high volume here, and we know there's high volume here, and there's certainly liquidity in the middle. So if every single stock was sitting exactly in the middle, resilience is programmed to be 0. So let's draw resilience. Resilience will be 0 when every stock is in the middle. If one stock moves just this much from here to here inside that zone, and every other stock was in the middle, resilience would become 100. Resilience is the net flux of all imbalanced stocks through this zone. And if all of them are at 0 and one of them is in the upper half of the box, then 100% of the market cap that's moving is moving up. Okay. Same thing, if one of the stocks was just slightly below and everything was flat, resilience would be minus 100. It's sensitive just at the middle. Now, what we actually do with resilience is we look at the potential inside of the box. So if the market is moving just to there, what we do is our algorithm looks at the move that hasn't happened yet. It goes, aha, Apple can still move this distance. Let's put an I here for the implied move in Apple. Apple can still move that much. And the algorithm goes, okay, that's $1 in Apple, and Apple has this market cap. So if Apple were to complete its gap fill, the S&P should be valued actually here instead of here where it's at. S&P has an implied move to the upside because Apple's expected to fill its gap. What resilience does is it snaps its fingers and every stock, wherever it is in this box, fills its gap. And then we calculate a new S&P value based on all the implied moves that haven't happened yet. We compare the actual S&P to the implied S&P. If the actual S&P is lagging behind the implied, then you have a leading indicator that says the stocks are likely to fill their gaps this way. The S&P is lagging behind that. It's going to go up. And if resilience is positive, then the S&P is lagging behind an upward movement of stocks. Or the S&P is basically underpriced the value of the stocks. It's a leading indicator. The red box is the distance between current value and the edge of the zone. Pretty cool, right? So it's designed to be a predictive leading indicator of the moves that haven't happened in the stocks yet. As best as it can be. So like, let's put up let's give you guys some examples here. So Apple, it kind of was falling all day. So when Apple fell, res fell. As everything was kind of selling off today, I'm going to find something that was drastic at the start. Let's see Microsoft. See the big techs, what they did in the box. I want something that broke through. Tesla, Nvidia. Does everything fell today? You're not going to see the cool effect. Nvidia, though, like whenever it passes, I was like a flat day on Nvidia, huh? You can kind of see it. So when Nvidia passes through the middle of the box, resilience takes an uptick. When Nvidia passes to the downside, wherever it was, like maybe here, then res takes a little bit of a downtick. It's hard to see because everything was selling off, but usually you can see like the effect of one particular stock pretty easily. It's kind of neat. In days that we're not just crashing out, you can see this effect very prominently. I already did Microsoft. Meta. Did Meta ever break through? Nope, it didn't. Google? Trying to find a cool. Yeah, so for a hot moment in time, Google breached above the RDZ for just a little, over the half gap just a little bit, right here. And let me make this really big so you can see it. Right here is where Google went above the half gap. Google right here, just in this one little tick, went above. And you see resilience goes from 49.9 to 53.8. So resilience is picking up that extra traffic that Google has now breached the upper half of the box, and Google is likely to trade higher. So at this moment in time, what the algorithm would say is, aha, Google is now here. Google has an implied value of here. So it calculates an S&P. Well, even though Google is actually here, that gives an actual S&P value. We calculate, well, if Google moves to here, there's a new S&P value. And if if SPY is lagging behind that value, which it will be because it's an upward move, then resilience ticks up a little bit to tell you that we're lagging behind a certain distance, etc. So it was, I've designed this, thank you, appreciate the comments, to be a leading indicator. That's how we think here. It's that sophisticated of a piece of machinery. So hopefully you like it. Is that a cool thing? Did you ever think somebody create an indicator, put that much thought into it? These edges of this box, after all, are high volume pivots every time you touch them. So high volume, we're trading from volume to volume. We're predicting what the value will be at the next volume node, right? How you know the implied value? You calculate it. The S&P is an equation. Is a market cap weighted aggregate of all the stock values. It's an equation. It adds up all 505 tickers of stock with a K. Okay. The actual stock values, market cap, it's a whole function. So we take that function and we can calculate the implied stock value. If the stock is at whatever the actual value of the stock is, 158.63 on Google, we'll calculate the actual S&P. But the implied value is saying that if Google is in the box here, then I can say Google's actual next value is here. So basically we use the values of the upper part of the box to the lower part of the box, the distance it needs to go to fill that distance. Gives us a whole new array of new stock values. If everything were to simultaneously move to fill the gap at once, which way is the market balanced? If everything were to complete its move, which way is that market cap flux tilting, positive or negative? That's all it's doing. Giveaway is about to be now. If I have these indicators, why throw a micro randomly? You can just wait for the setup. That's it. That's how you do it. Is that pretty neat? So the implied value is calculated, and that's kind of what we're trying to do is we wanted to create it as a leading indicator, right? And so, for instance, SPY today. Now, in irrational markets, we kind of throw it out. But you see that SPY today was trying to fill its gap. Now, the resilience indicator was positive for a little bit. There was enough market cap moving through here that the SPY was trying to fill its gap as well. So the thing is that positive res means the S&P is likely to fill its gap because the majority of the market cap of stocks are doing the same. So as resilience is just greater than 0 up until this point, SPY is making an effort to try to fill its gap, and then it's starting to fail. At this moment in time, resilience is negative. And in NASDAQ, it started becoming negative right here. Right here. So NASDAQ lost its power here. SPY lost its power here. So the attempt at SPY to track the stocks lost when NASDAQ failed, and then lost again when S&P failed. You see that? This is a gap fill predictor, is exactly what it is. It's a predictor of gap fill. If the S&P is tracking the stocks, you can see that the stocks aren't picking up any headway as a leading indicator. And it's just been bad ever since. I mean, ever since right here, this exact moment in time, we lost that indicator. There's no way the S&P is going to rally from here if the stocks are doomed to come to this side of their gap. The stocks have gapped down and continue to go down. Pretty cool, right? When you close your long because interrupt, what do you mean by interrupt? So usually I will trade to next resistance. An interrupt would be an example is that I'm longing from here to here is a normal trade setup. From bear zone top to bull zone bottom is a normal setup. However, along the way, it bumps into something else. When I bump into something else, this bottom, this box is a resistance. If this resilience is less than 0, we teach you guys this. So if the resilience is less than 0, check. then it's an interrupt to the trade I would normally take. Normally, I will trade from here to here every single time. But because I have a resistance interrupting the move, then I get out of the way early. A go open or close gap, right? Every day a stock will gap up or gap down every single day. Right. That's it. All right, let's spin the wheel, guys. Ready to spin the wheel? Huh? What's that? What's that? Ready to spin? Ready to spin? Spin right? Ready to spin? Spin? Ready to spin? Spin right? Ready to spin? Oh, all you need and all you want. Okay. I was wondering what the lyrics were. ETF, we're giving away 3 static accounts today. Static. Hold on. Oops. Shit, I always do this. 3 static accounts. I need to actually download the freaking song. Whatever. I interrupted the vibe. I know. Cranking that money printer. Let's spoon the grapefruit. Wait, what's that? I don't know. What emoji is that? Let's spin the wheel. I was like, oh, that's a wheel. I need to take my glasses off. I was like, let's spin the wheel. I'm so bad. I was like, let's spoon the grapefruit. I'm like, I'll have a grapefruit for breakfast. Sounds like that's a wagon wheel. All right, let me take off the goofy glasses. It kind of looks like a grapefruit. I don't know. What century are you from? Clearly the 1800s. It looks like a fucking wagon wheel. All right, let's go. ETF. 3 ETF accounts. 1, 2, 3. Congratulations if you're a winner. You must type your name in chat. Type anything in chat. Let's spoon the wheel, baby. She's so funny. Lamb, dude, stop winning my contests. What the hell? Bro, he's won like 3 days in a row. Hacking. The luckiest guy I've ever met in my entire life. Bro, stop winning my contests. That is so funny. That is hilarious. So you guys need to go become friends with this guy in real life and take him to Vegas. Jesus Christ, man. That is so funny. Yeah, don't leave your house today, dude. All your luck is gone, okay? That is so funny. Congrats, man. He's becoming our new favorite friend here. No, he's lucky. He needs to tell us the direction of the market. When we need the monkey paw. Casey Marquez. Good job, Casey. Lamb has won 3 times. That's hilarious. Streamer is scanning us. I am. Lamb and I are working together to make sure that. Gotta look at the algo for this wheel. For this grapefruit. Alright guys, we're gonna spin the grapefruit today, but we got the grapefruit algo is certainly messed up. What's his edge? I think it's got a cool name. Casey, you gotta say something in chat. Casey. Casey. There he goes. Alright. Congrats, man. Alright. Good job, Casey. Good job, good job, good job, good job, good job. The last one for the final one.
Late nights, early mornings, charts up, trying to see what's forming. Mad on the mic, yeah, you know we schooling.
Because, Kaizen, because Lamb has won every day for the last 3 days, literally. He's won every day. They were saying that he's scamming the system. Lucky Luke. And you might, I don't know if you missed that. The wheel has spun this lucky guy's name and Lucky Luke. See, here's how Luke won. He scammed the wheel by putting Lucky in his name. Lamb is secretly Victor on an alt account. Lucky Luke. Congrats, bro. Congrats. Yeah, no, Lamb literally has won, like, all the prizes. He's the guy walking around the carnival with, like, 2 giant teddy bears in his hand. His girl over behind him carrying, like, 2 more, you know? And everybody hates this guy as he's walking in the car. Just, like, really leave some prizes for the rest of us. Congrats, guys. That's incredible. He certainly has hacked the wheel. Good job, guys. Lucky Luke with the lucky win. Victor swears he's not Lamb. It's Victor. We know it. Good job, guys. We love it. ETF accounts, and this is great. We love when these guys hand us some accounts to give to y'all. We love ETF. Yeah, every single day we need the market to go. Lamb just needs to pick the direction. Lamb is our new monkey paw. All right, so Catalyst active, you guys. Since the market's been running through here, you see how it's just kind of moved up and down, extra volatile. NASDAQ 59 to... The NASDAQ is moving up and down 100 points every 15 minutes, right? Imagine that being drawdown you can be taking, right? No one deal with drawdown like that. Did I get my Apex money? Finally got my Apex money 2 weeks ago, or 2 days ago. It was 4 months late, and then on the 15th, they said they're going to pay out, and then it got paid out 10 additional days later. Or 8 additional days later, whatever. No, 10. Do another one? Okay. All right. We're going to test out the new one. All right, everybody. Everybody type Victor in chat with a K. We're going to see if Victor wins when Victor is the prize. Okay? And if Victor wins when Victor's the name, then we'll gift out lifetime to Victor as the victor. Okay. Let's see if we can do this. Let's see if we can summon... And if Victor... And if your name isn't drawn, then what you have to do is you have to take the person whose name was called and you have to take them out for a drink. You owe them something, like it's a steak dinner or something. Victor's like, wait, I didn't sign up for this. Okay, let's see if we can game the system by making it Victor's own thing. Victor, do you have a song of choosing that you'd like to do, or do you want the traditional lo-fi beat music? Can Victor win his own contest? No way, I lost all my lines. What the heck? Platform crashed and I lost all my drawings? No. Oh, well, whatever. I'm sitting out anyways. Okay, Victor. What's that 12-ounce fillet? Okay, let's see if we could spend and Victor wins. Contest is Victor. I'm gonna freak out. Jorn is the winner. 1 in 77. All right, so you every time you owe Jorn a steak dinner. Jorn, you get the free dinner, free date with Victor. Free date with Victor. Victor's a funny person. I'm sure a date with Victor would be awesome. Let's see if I can enter the contest. I'd like to hang out with Victor. Mickey D's incoming. I'll take a free Big Mac with Victor any day. Now you have to buy your own plane ticket to Germany. Jordan doesn't want the date, Victor. You're being rejected. Jordan's like, I'm having second thoughts here. Just kidding. No lifetime. Let's spin it one more time. Let's see if Victor's the only entry into the new giveaway. My platform crashed. That sucked, and it didn't cache the drawings I drew. I was kind of depressed on that one. Okay, one more. Well, how many spins it can take? Infinite number of spins. Jim Daniels. All right, so what we're gonna do is let's have. All right, so nobody type. Okay, so Victor, type in this. Only Victor type this in. Okay. Type in AABBCC. Victor. All right. Nobody else typed that. Let's see if your name shows up here. Hold on. All right. All right, Victor. Okay. With 3 people, let's see if you win, okay? If it was just Victor, he'll still lose. That's so funny. Okay, this is just teasing you, okay? See, you can win. What does he win, though? He wins everything. Victor, my boy, you've won! I've been looking for somebody to take over the chocolate factory all these years. It was all just a test. Victor, I can't be around forever. Somebody's got to take care of the Oompa Loompas. Can Grandpa come too? Yes, and the whole family. You drank the fizzy lifting drink. The Oompa Loompas had to scrape the top of the factory. You get nothing. I said good day, sir. Was the fizzy lifting drink? I haven't seen that many in a while. All right, Victor, congratulations. You win 1 business loan. Good job. Okay, so you can win. The problem is that it's just waiting for you to get a better prize. I think that's what the universe is waiting for you. All right, ETF winners, I'll get with you guys later. After this, I have a good accounting system now. The ETF peeps. Go to our Discord, send me a message, and I'll send you the code. I realize if I did it right now while I'm live, I don't mess up. ETF has been so awesome because I've messed up like 3 times. I gave out the wrong code. Well, it's because like I tell you guys, send me a message in Discord, and then 2 of you guys send me a message like a day or 2 later, and then I have to like, Discord makes you accept friend requests. It's a whole ordeal. And then I get the codes mixed up, and they've been so nice at throwing out extra codes because I messed up. Good job. Congrats to all the winners. Good job, good job. Did you default on Apex? I didn't get defaulted on Apex. Not yet. So if you guys missed the defaulting joke, somebody called yesterday. I get business loan calls like every 10 minutes. And the joke was, like, originally there was this group that kept calling me, and the guy was like, look for the business owner. You know, that Jersey kind of like Italian sort of sound, and then he started sounding Russian, like in later calls. That was the same company. It's like, you want the business owner? The business owner want business loan, and we were just like, so, you know, we were kind of like playing the whole Bradley Cooper Limitless, where you have like the Russian mafia loan shark kind of guy. It's not every time you call for a business loan. You know, we've been trolling the business loan people, saying like, what happens if I don't pay? And the things they've been saying has been hilarious. Like the last guy yesterday was like, I don't understand. If you don't pay, you get defaulted. I'm like, defaulted how? Like at the bottom of a lake? Like in a vat of acid? Like buried in concrete? No, you get defaulted. Like, you're going to default me and my family? What does this mean? It was hilarious. And it was just, it's become it's business loan defaulting. Yes, you not pay loan, Vladimir will default you and your family. And, sign. You sign the papers now. It was. You imagine like the the gold tooth and like the windbreaker material jumpsuit and all that stuff. I will default your kneecaps with an iron rod. Jordan's gonna be there. Victor is like, when you come into Germany. Anybody's in Germany, we're gonna hang out with Victor. That's what we have to do. All right, so basically, guys, I don't remember the numbers because my platform erased them, but I'm gonna assume that you guys wrote them down. So you guys let me know what they are. Either way, that's just the number for today. But if you guys can let me know, I can write them back down. I don't want to calculate them again. Sucks that it didn't cache any of my data when the platform crashed. My Apex payout, it wasn't payout from accounts. I'm not trading my Apex. I haven't for a while. It's the affiliate payout. They were delayed on the affiliate payout from like all the accounts you guys buy. I don't know. It was the first time I ever got a check from them, though, in 4 months. And I passed the threshold in December. Really? No clue. I have no idea. I wanted to call shenanigans, but since it's the first payout, it could have just been a clerical error or new rules, or I don't know. But they pay out once a month, and then they were even delayed an additional 10 days, so I'm not really sure. I'm just going to chalk it up to clerical. I'm not going to call shenanigans unless they do it again. But congrats to the winners, guys. So chances of us getting rate cuts this year are just going through the roof with these inflation expectations going up. Don't sleep on this, guys. Do y'all understand how this morning I said I feel like the market's going to crash out because the inflation expectations going through the roof? That's just a bet that the FOMC is not going to cut rates at all. That 50 basis point is probably going to 25 or less. I believe the chances of us getting a rate cut is practically zero at this point. I feel it. I haven't checked the futures trading yet, but I feel like that's probably what we'll be seeing. Let's look at the Fed watch really quick. See what the probability has shifted since the Michigan numbers. Oh, that's a huge shift. So the next rate, 13% that we get our first rate cut here. Wait, no, it wasn't. That's not a huge shift. What was it last week ago? So it's gone up 2%. Well, actually, not really that much different. No, that's just noise, I guess. Again, it's not really that big of a shift. But 86% chance that we have no change and 13% chance we have the next target rate for the May 7th meeting, which is coming up in a month. I'm going to bet that the market's reaction here is that they're betting that the Fed's going to do nothing. Chad Selesky will be directing the next Blade. Wait, no way. Yeah, it's so crazy because when you know, Blade is great. Like, I'm glad that they're rebooting that, right? It was so cool in Deadpool when we got to see everybody come back, you know, like Elektra and Blade, and just like pretty cool. Selesky is who did John Wick. He also was Keanu Reeves' stunt double in The Matrix, and a lot of people don't know that either. Him and Keanu Reeves work together a lot. He's cool. He's good. Yeah. That'll be cool. John Wick movies are absolutely like flawless movies. They're so good. The June one was everybody was expecting a cut in June. Yeah. I'm pretty stoked about the new Blade movies. The old Blade movies were great. Jake says he's the biggest small cat or holding a large car on a rope. Default means dead, of course. What else would default mean? You will default. Well, it's because the broken English said you will be defaulted instead of like you will default on the loan. Because I go, what happens if I don't pay it? I was trying to troll him. You will be defaulted. The broken English made it sound like a threat. It was so funny. So next time that somebody crosses you the wrong way, you look them in the eye and you go, you will be defaulted. See what they say. Found us yesterday, Maureen and Dave Evans. Welcome to the stream. Have a great weekend, everybody. Yep, have a great weekend, Maureen or Dave, whichever one you are, or both of you. Have a great day. And welcome back to the stream. Of course, come back every day. We like to do giveaways all the time. You can see transparent trading, all that stuff. You get to see everything I do on screen. No camera tricks, no craziness. No hiding losses, no nothing. So, you guys like it. A little more mature here, a little more scientific approach to the market. Different. Oh. Petrobras. The hell is Petro Brazil calling me? All right, let's check in the business loan, guys. Hello? Hello? The caller ID's always in there. Hello? Hello? I will find you, and I will default you. Oops. Oops. Trying to get a picture of this for my tweet. Looks like a dick. What a good day today, guys. All right, we'll do, continue our little giveaway spree as the days and weeks go by. We'll be getting more and more stuff to give away to you guys. Excited about that. Oh, this could be it. Hello? 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 Oh. Hello? 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 They don't even respond quickly. It's like always a blank when you pick up. It's like blank. Trying to get a good one. Ooh, that 57.45, beautiful MHP, loss, reject. I've been shorting this all day. I mean, got the direction right. It's good. It's good. Oh, one free class. Noah. Oh, as a matter of fact, okay. Free class giveaway. Free class, free class, free class. Thank you. One lucky person will be able to join in on the boot camp. Have a nice weekend, you guys. What are my thoughts on journaling? Journaling is helpful if you know what to journal. Like, people take journaling like it's some beautifully acting, like, or that behavior is going to somehow affect your performance. And journaling may or may not help people. It's not a bad practice to reflect on what you did. Sorry, I'm coughing in the mic here. But a lot of times when people journal, they will throw in some bias into that journal and kind of journal incorrectly. It's like writing in your diary, lying to yourself. Like, you get in a fight with someone, it was your fault, and in your diary, it was their fault. If you're not honest in your journaling, it's not gonna help you at all. If you're honest in your journaling and journal the right stuff, this is the rule that I'm supposed to follow, and I broke this rule. I break this rule a lot. I need to stop breaking this rule. That's helpful. You're forcing yourself to come to terms with something that you're doing wrong that you should be doing. Everybody type in free class to get free access to the boot camp today. Free class, free class, free class. So it's helpful if you journal the right stuff. But you need to journal correctly what you're missing and what you're doing wrong. And you have to identify what you're doing wrong. Identify the feelings that you had. Like, I had a bad day that morning. I was just messed up in the head. I got in a fight or something. I was late to work that day. Anything that you think is pertinent to your emotional state is important. Anything that's pertinent to the rules you broke is important. But a lot of people journal and try to still justify with their failed indicators, like why they happen. Well, okay, so the 2 moving average just crossed over and I longed. Maybe I shouldn't long. Maybe I should short. You're trying to like deduce further like conclusions from noise. Don't waste your time doing that. Like, well, maybe next, you're like, okay, well, it bounced off the VWAP and I took the long and it didn't work. Maybe next time I won't long, because right there, that's where journaling fails. That's a useless act. Trying to guess at your indicator's performance when the stock market's random is going to be what's a waste of time in journal. So don't journal with that. You guys got it? Journaling is about rules you know that you must follow that have odds to go with them. This rule has a 70% chance. I went to long there and it didn't work. I guess that's 30% of the time that it failed. That's okay. I lost a lot of money because I bet too big. Well, let me not bet too big next time. Your conclusion is like, maybe bet smaller or whatever. Your conclusion isn't like maybe this indicator, maybe that indicator, maybe this indicator, because indicators are random. And a lot of people journal by like saying, well, maybe next time I'll look at the 5-minute chart and see what that says, or I'll look at the 1-hour chart and see what that says. You're just wasting your time. And in life, time is short and precious. Don't waste your time doing that. But anything else is good. Mental state, anything with numbers and odds, anything with a rule that you know that has numbers and odds you don't follow, anything about risk management, position management, perfect. I've seen a lot of trading journals who are like, can you rate my journal? And it's like, I lined up the 50 and the 40 and the 20 moving averages. And when they crossed over, I did this. But the last time when they crossed over, I did that. And maybe it's because they do or don't. And maybe if you're trying to discover odds of an indicator, journaling isn't the best place to do that. You need to make a spreadsheet or something. Journaling is about taking the time to reflect on what you did wrong. Indicators on their own are wrong to begin with. They can't predict the market. So trying to spin your wheels, journaling about the effectiveness of an indicator is going to be a failed, waste of your time. Does that make sense, everybody? Does everyone get what I'm saying? Journaling is good for collecting data, but collecting data is good for collecting data. Journaling is like putting words together and coming up with like a, in plain language explanation of what you went through. Collecting data, I think, should be done outside of the journal. But yes, they're both good behaviors, right? Collect data in a spreadsheet, and that's an emotionless, there's a line between the two. Data collection should be emotionless. Journaling is about like reporting your emotions. You're a little bit like human in that moment. You're susceptible to the bias in your own ego and stuff. Don't carry your ego over into your data collection because you'll try to fit the data to match your bias. So separate the two out. It's that's my main takeaway here. So don't try to look up the effectiveness of your indicator in a journal. You're going to riddle that thing with your own ego, and you're going to get useless data collection. Data collect outside of your journal. So effectiveness of indicators and all that is not a journal thing. I always teach people that. Can I confirm if the first account on your list is the last one to enter the trade? I have no idea. It's random because it's an order of most profit to least profit. It's ranked in order. When I take the photo, it's ranked in order from highest to lowest. So if one of the accounts does better than the other, it switches position in that list. So I don't know which account is the first one. I don't even know which account this one is on the screen because it doesn't show the account number. But no clue. I think this one was the one in the middle this time. But I can't show 5 DOMs on stream. There's not enough room for it. I only have like a tiny little corner to put one. All right, free class, spinning that wheel. All right. Most of you guys are already members. All right, this is a quick and easy one. We're gonna get out of here in just a little bit. Almost at the time where we kind of cut the stream out, but actually we'll hang. We'll hang for like another hour. Chris Cortez, congrats on the boot camp. Okay, those of you that have won. Go to our Discord, link in the description below. Congrats. Come in there at any point today. Send me a message. We'll get you guys hooked up with everything. Does anybody know how to add stop loss and take profit to already open position trade evade? I don't know if you can for prop firm stuff. I don't know if you can do that. That I don't know. It's been nice over the course of the month with the Tradeify. I've only busted like 3 accounts. It's good. Only 3 out of all of them. And they didn't even bust. I voluntarily reset all 3 of them. None of my accounts have actually blown up. They've just lost enough that I reset them. So the one I reset one after that big loss day on Wednesday because it was one that already got a payout, and it was on the second streak. So basically, one of the big losing ones was on Wednesday. It was an account that had 160,000 in it, and that day it lost like I don't know, like 4,000 with it, and it was on payout number 2 where you had to get $4,500 over 10 days of trading, and already at a $4,000 whatever deficit. So then I had to make 90,000 over 10 days with 20% consistency. That's $900 a day. Didn't make sense, so I actually reset that one on purpose to start over. My YouTube's acting funky right now. But these are the stats. So that was the one we had. Like I had like a losing day that was like $300 or something in here. Hold on. Not bad. And then along the way, I've reset 2 of them. So 0 of them have blown up though, which is good. Am I meeting the consistency rule? I don't care about the consistency rule anymore. My first payout will hit the consistency rule for all of them at whatever price they are. So all I need is 20%. And if I have to make 25K per account, I don't even care. Yes?
Do we... Friday striptease here.
Hold on. Can I put on some music for it?
Yeah.
What? Guys, guess what? We're taking this stream to the whole next level. All right, hold on. We need like a... I don't know what kind of song we could play though.
Oh yeah, because if you play anything else right now, your whole stream will get canceled, right?
Yeah, probably. I won't get like whatever. Let's just pick something at random. Okay.
There's nothing sensual. I'm getting cold here.
Trading paradise is where I wanna
Alright,
be. Following the volume that show me how to see. When to hold back and when to make it rain. Building wealth through market ups and downs again. Trading day and night. Trading day and charts and paths light up on my screen.
What? What's...
Yet unseen, patient wait for the perfect trades, resilient through all the market waves, keeping faith when others start to doubt, know exactly when to stay or get out, learning from the best to find my way.
Happy Friday, y'all. I hope that put a smile on your faces.
Damn,
I dock out.
that is sexy. That's the sexiest thing I've seen in a while. Who is that? That's a good-looking guy that looks about 10 pounds heavier than this guy. But hey. Guys, look. Actually, look here. Can you see how much weight I've lost since like last year? This is the same time last year we went to Vietnam, isn't it? That was so funny, man.
Thank you.
That is so funny. We've been trying to troll each other with those shirts for a long time, and now it
Yeah.
finally happened.
You haven't shown them my shirt yet, right?
I need to. I need to wear your shirt on stream one day. That's so funny.
You should do giveaways.
Of t-shirts?
Yeah, we can make like 50 of these shirts and then do the...
You got... Spec gave you a tip. You got $10.
Woo!
Don't give her a hint. She's gonna quit her job as an eye
I
doctor.
know, I
Yeah.
can do this. I think I'm better at this than what I actually do as a real job.
Yeah, that is actually pretty good. $10, you're on your way up. Hey, it's a start, right?
Yeah.
Nice.
Pays for my crawfish.
Crawfish was good yesterday, wasn't it?
Yeah, it was.
That is so funny. Hold on one second. You become immortalized here. What is everybody saying?
I'm reading OnlyFans.
That's so funny. You guys are so fun. She's the fun one. What is everything? What's up? Everybody, wait, I didn't read the comments. Free waifu. Remember what this is about? Fashion show. Guess ways to stick around the stream. Song Jessica Rabbit. Why don't you do right? Oh, yeah. Hey, wow, that's a good picture of you guys. Look at Pickle right here. The bokeh shot looks really nice. Look at y'all. Hey, what's up, buddy? You're no longer slobbering. Waking up in pools of your own slobber. He was slobbering for like 2 days, 3 days. Like we'd wake up and his whole side of his body was just like slobbering. I'd look at him and he was like just like spitting it out like water hose. We thought he had some kind of infection or some kind of something. No, he's better. This isn't all wet. It's about Pickle's full size, huh?
Yeah.
I don't think he's getting much bigger than that.
Right.
I wish I had money to give you, but
You do. You have $10 to throw in my face.
no, that's true. I do.
I don't take coins. Just dollar bills.
Yeah, that's
Dollar
rule.
bills.
Yeah, rule number 1 at the strip club is you don't fall in love at the strip club. Okay. Rule number 2 at the strip club, you don't fall in love at the strip club. Okay.
I'm Matt's pimp.
Yeah. And rule number 3 at the strip club, don't pay with change. You can get kicked in the face with their stilettos. Trust me, they don't got pockets. All right. Very nice. Where did you get that trench coat from,
I
man?
just got it in the mail.
Really?
Yeah, that's why I wanted to give you a show.
Yeah, you got a trench coat in the mail at the beginning of summer in Houston, Texas.
Well, it's on sale because it's hot.
How much is that? You got that because the air conditioners.
$70.
The air conditioner's jacked up. That's why you got that, so you can be all warm downstairs, right?
That's true. That's true. But that's like a trick. Trick on saving money. Buy winter clothes in the summer and summer clothes in the winter.
That's why. That's really smart. That's why I keep you around. This is, I don't think of these things.
And fix your AC in the winter, not in the summer, because your tech will be more available, especially in Texas.
Well, that doesn't make a lot of sense. Very nice. Very nice. All right. All right. Bye. Thanks for coming. See you guys later.
Can I leave the door open so it cools down in here? I need to zap some of the cold air downstairs.
I'll be done in a little. I'll open it. Can you close it? I'll open it in a little bit though. My gosh. Hope none of you guys' wives are watching that. That's too hot. Too hot for YouTube. Some funny shit, I'll tell you. Oh my gosh. The super V-neck. Yeah. That was a super V-neck with all the buttons unbuttoned. You need to wife her up. That's hilarious. To turn off the stream. That rock scooter merch, not the finish I was expecting. No. Looks like everybody won the giveaway today. LOL. That is a win for everybody. Patty says LOL. She's this huge goofball over here. All right. I had a deep V in that pic. I had a button-up shirt that was unbuttoned like 3/4 of the way down. And I don't know why I think like there was an old picture that I took and she was like, do something sexy or whatever. And I just unbuttoned 3 buttons and I was like that. And that picture we've always had. Then she went to Vietnam with her family and came back, printed that on a shirt and just was like, I got this shirt with you on. It was so funny. And we were like, we're going to wear these shirts to kind of like, troll each other with. The one time we did wear the shirt was, she made one for her too. We went to go Activate. I don't know if you guys have Activate in your city. Activate's awesome. Activate's like this interactive gaming thing. And she wore the shirt with me. I wore the shirt with her. When we went to Activate for her birthday, actually, it was kind of fun. Rocket fans, the next OnlyFans. $10. She's no longer an iDoc. She's a strip doc. I've been together like a year and a half almost. Have you seen the strip club recession indicator? Strippers are getting dimes similar to 2008. I didn't know that. It's not what you spend, it's what you save on the trench coat. That's true. That's true. That was YouTube reel right there. Yeah. Activate is so much fun, dude. Yeah, I love it. You always see they're sweaty. It's always a workout when you play Activate. It's crazy. All right, guys. So this is the month of stats. Where's my mouse? So in here, 0 of my accounts have busted at the limit, which is good. What happens is if the consistency gets too far away where it's unreasonable, then I close out the account and start over. So the example is, and this one I was explaining, because there used to be a third red day. I think it was somewhere in here. No, the third red day was like somewhere in here. I don't remember which day it was. Maybe it was here. This used to be a red day. And I've had 3 red days this month, and that was the big one. The way that it works is that on Tradeify, you get $9,000 at 20% consistency and 10 days to trade. Okay? And so you have to make like a certain amount a day, and then you get to the end. And this account made it to payout. This is the account that got paid out last Friday, whatever payout was. Round 2 is their counter resets after you pay out, and then you have a brand new target, $4,500. 20%, 10 days. So 20% of $4,500, you're roughly trying to get like $900 a trade, right? Give or take. Well, that's your baseline. Anything above 900, this 45 gets bigger. And so on that particular day, like I said, I was down like $4,000 or $5,000. So on that particularly was the account that lost the most. And so while it was up, I think when I took the payout, it was like at 163, something like that. And I took the payout, and then that account was at 160 on a 150 basis. And then it lost like 4,000, so it was at 156. And then I reset it. So the account was still profit like $6,000. But do you guys see why I choose to reset it? Because now I have to make up 4,500 plus 4,000, the starting point. I have to make 9,500 at the same consistency. I can't go above 20% relative to that. Anyways, I started over on the account to get a fresh 9,000 target with everything else. Plus, I'd have to trade this one slightly differently as well. So the 0 point is your consistency from there. So it's based on the 4,500. So I'd have to crawl back 9,000 profit. I guess I can make more from the previous, but yeah, you can reset the account at any time. But once I got the payout, it's just I just decided to reset the account and start over, because it doesn't matter either way. It's a brand new account. You start over with different roles. Then I'd have one, that's having to crawl back and others that wouldn't. It was just like whatever. But those are the stats for the month. I show you guys the stats. So far, as you see, I'm up 48. 48 for the day. And actually, this is even showing all the trades. So it's actually a little more than that. But that's basically it. Let me see if I can refresh that. It's actually slightly more than that. But that's the month. And of course, this has been like a crazy trading month. I think I did pretty okay. I think I did okay, all things considered, in this kind of crappy ass environment. Not bad. I'm halfway to my 100K goal. My first goal was 100K. Have I had a losing month? I have. Different types of things that I do have had losing months, but in general, my day trading, I haven't had a losing month in a while. In these prop accounts and the live accounts and stuff, I've had losing months. But they're like different because it's not a real trading account that's like trading up. You're not really losing much. When I say a losing month, meaning I put more money into the prop than I took as a payout. That would be a losing month. But then it's always small. It's not really a big loss. In my real trading accounts, it's been a long time since I've had a genuine losing month. I'm talking years. I normally sit out in bear markets. Like this, I'm sitting out my real account. Now I'm not putting anything in. Wait, you're out? Wait, Red Rocks? Wait, what show tonight? Mad Yoda, which show? Is this the, Are we talking about the Gareth Emery? The dubstep? Oh, is it dubstep? Dope. Enzo? Nice, dude. We're going to Laser City on a Saturday. Have y'all been to Laser City? Gareth Emery? Me like this. Me and iDoc, we're gonna have a good time. Laser, house music. Do I recommend multiple accounts for somebody starting out with just one? Multiple accounts. You need to learn to trade the right way from the start. Multiple accounts and then trade them separated at your pivots. Use one to get in a position. Use another to DCA. Like when people say there's no DCA rule, here's the trick. You have 20 accounts and they say you can't dollar cost average in. Okay, so the market falls to there. Long in 5 of the accounts. Market falls to there. Long in 5 more accounts. You can add to your overall by splitting your accounts up this way. When they say there's a no DCA rule and people complain about it, just split your accounts up and then you can DCA all day long. So that's what you need to do. How do you manage account order entries to make sure you're not blowing up on the losing ones? I keep 5 DOMs in front of me at all times. I divide my 5 accounts, each one is in a DOM. If I have 20 accounts, each DOM is a group of 4 accounts. Oh, somebody said, help us instead of Guru's Lambo payments. That was a generic comment about Guru's Lambo payments. That wasn't a slap at Pat. Pat and I are actually pretty cool. We talk all the time. So everyone pokes fun at the industry as a whole. It's not a jab at him. But instead of any trading guru affiliate person is going to have like, you know, their generic amount of like income is, I mean, their general amount of their income is all going to be mostly affiliate dollars for sure. If one is very down, do you start with it or delay it if your pivot is 100%? Oh, so like one of your account is really far behind and the other accounts are ahead. The accounts that are ahead allow you to take more risk because they're ahead. So you want your account that's in the worst shape to be your best pivot. So if you're hitting a pivot like MHP from the top, and you're going to overshoot 10 points, use your worst account at the overshoot to get the best cost basis on that one. That's the one that has the most to grow. If you're overshooting a pivot, your last entry is likely to be your best gain if you win. If you blow up, you're going to blow up anyways, right? So the one that has the most room for drawdown is the one I enter in first. And usually every day, that's how I arrange my screen. So the one on the stream is usually the best account. The one that has the most ability to take drawdown, which is usually my first entry. And I give you guys my first entry. And it's to show you like my real intent is to long here. My first entry is always on the screen. And then off the screen is the accounts, the rest of them. So my first entry is the best account in the best situation. The one that can afford the most drawdown. Usually the one that's the furthest ahead. How much does it cost for 5 Tradeify accounts? It depends on which ones you get. Straight to funded are the only ones I do with these guys. But they're all good. They're not bad. They all have different rules. They have a growth and advanced growth and straight to funded. The difference between them is that the advanced is a trailing drawdown and the growth is not. It's an end of the day drawdown. And the growth costs a little bit more per account. And we get 35% off. So this deal is going to last for like, I think till the end of March. So use the Rocket Scooter code. You get 35% off. Straight to funded is significantly more expensive. So let's look at the base of 100K. It's $100 versus $249 versus $629. And when you do 35% off of that, that's roughly going to be about 200 and something, almost $300 off. 200, maybe 250, 270 off. So 35% off of this for the Rocket Scooter code. And the best thing with straight to funded, and I'll talk to you, this is your standard. Advanced is your standard type. ETF has one called Fast Track. It's pretty much the same. Apex's standard account is just like this. It's a profit target with the drawdown, usually 6,000, 3,000 intraday drawdown. This is your quote unquote Apex account or ETF Fast Track. This is the same type of account. Growth is paying a little bit more for end of the day. ETF also has an end of the day drawdown. You pay a little more for that. I always pay more for end of the day. Trailing drawdown is for, it's so hard to pass with the trailing drawdown. Avoid it if you can afford it, I tell you. So I always do the end of the days, always. And then these both have eval stage. You have to pass the eval, then go to funded, or you can pay a little bit more and skip straight to funded. These are like $450 a piece now for the 150s. These are the ones I'm using. The biggest one they got. But up to you, yeah. So 5 Tradeify accounts, depending on what you get, could be like $500 if you do the growth, advanced. It's probably gonna be like $120 a piece. So about $600 for 5 using our code. You're shorting S&P, I get profits. Awesome. Straight to funded is stupid. Growth is smarter and better, especially for new folks. I would say that analytical market theory is probably right for new traders. Growth is probably smarter and the best value for a new trader. Definitely growth is better than advanced. End of the day drawdown is worth every penny you can do. Straight to funded is different. I do this because A, I can afford it, and B, I want to stay in the funded environment as much as I can. I'll just pay money to do it. I don't want to do the eval, then pass another psychological stage. I just want to go straight there. But analytical is correct. Like from the start, at the starting point, growth is probably your best place to start and get 5 of those. And then trade them, not copy traded. For a new trader. Don't do anything you can to avoid intraday drawdown. That's literally the easiest way they squeeze you in these casinos. And the intraday drawdown is designed to squeeze you even when you win trades. It's a kind of a gimmick. So analytical would probably agree that growth is smarter because of that. It's definitely better than advanced. You should do everything you can as a new trader to avoid this. I don't even touch this. This is too difficult for me. I would never trade with an intraday drawdown if you paid me to do it. So I don't understand why these simfluencers trade Apex all day long other than just to rake in affiliate fees. Intraday drawdown is it's a scam. It's designed for you to lose. It's not designed at all for your benefit. Intraday drawdown will fail you even if you win a trade. You go up this high and you lose that much and you still bust the account because you didn't close it fast enough. Real trading isn't like that. So avoid intraday all you can. It's my suggestion to you. Growth is great. It's middle ground. It's not the most expensive, and it's end of the day drawdown, which is what you want. Is there any strategy around the intraday drawdown? You have to basically, when your trade goes up and hits whatever your target is, you got to close it fast. So as the market is moving higher, once you hit your pivot, you got to get out. So you have to reduce the distance at which you're trading for intraday drawdown. You can only go for like 10-point moves in the S&P, 40-point NASDAQ. Don't try to stretch any further than that, Evan. So essentially, you need to go to a certain place and then close. So don't try to go for 80-point, 120, 200-point moves in the NASDAQ. Get your 40 and get out. Trailing stop loss. Trailing stop loss will help, but that's not even it's gonna help you beat the system because your trailing stop loss likely will get hit on noise and you'll rob yourself of your profit. As we know, the S&P and NASDAQ moves in S&P moves in like 10-point moves to hit strike to strike between SPY, and QQQ moves in 40-point moves, strike to strike in NASDAQ. So get your 10, get your 40, close the trade, and then wait for another trade, get your 10, get your 40. That's the only way I get around intraday is I take small base hits. Long or short, same both ways. No trailing stop loss. Like the S&P today, 565 to 556, 566 long from bear zone, bull zone. That long right out the door, this little guy right there. Get in, get out, and close. With intraday drawdown, you're not trying to catch a big move. That's the bad thing. The choppiness of a big move will actually be what squeezes you. You want to take small moves and consistent moves of size 10 and 40, respectively. That's how you beat the intraday drawdowns. That's how you beat Apex. You got to get in and get out quick. Just take a bunch of base hits. And then once you get to the threshold where you no longer have a trailing drawdown, then you can trade it like normal. That's the way to do it. What trade is most likely now? The market is selling off catalytically active. It was likely to continue to sell off. There is no bottom end right now. What's your max position size percentage of your account drawdown? Did you, Moro, in the class yesterday, we kind of detailed how we calculate that. I allow myself to lose the maximum risk interval on a single day, and that's my max position size. And then the funded account. So say that I can lose $10,000 to go bust. Okay. And the S&P currently is what, 43 points for risk interval? So a Trump tweet or something comes out, I fall one risk interval, and I need to be able to survive that risk interval, right? So let's do the math. $10,000 divided by 43 divided by $50 a point. Or sorry, 43 points divided by, hang on, risk intervals 43 point divided by 50 a point, yeah. So my max position size on a $10,000 drawdown would be 4.65 on that basis. So because it's 4, my normal is 4, my medium is 2, my small is 1, and my sit out is 0. Okay, my normal for the liquidity map, medium, small, and sit out. Okay. Yeah, Daniel, let me show you guys really quick. I have to redo it anyways because my platform crashed and I lost the number. So what you do is you find a self-catalyzing move, right? An event took place, the market rallied up to here, and then we started straight selling. What you're looking for is the sign of what we call an impact line. So it's an illiquidity pivot. It's one of our standard pivots we teach you on. So an example is, let's use this upward move as an example. Let me go to a tick chart, and you can see them easily on a tick chart. Example is here. Okay, so when you start to see moves go in a certain direction without a lot of retracement, like look at this straight selling right here. You start at the starting candle on any tick chart, and you basically are looking for signs where the market starts having little V shapes. Like this is called volatility when you have V's on a tick chart. And you're looking for this downward move. The biggest V that you see before it starts getting smaller happens to be this V right here. This one's slightly bigger than this one, which is slightly bigger than this one. So the biggest one is the one that you mark from the start of the move to the bottom before that volatility collapses, okay? And then the midpoint is that retracement level that you care about. There's a selling pressure, maximizes its illiquidity because it's volatile, and then liquidity steps in, which is why the V's are getting smaller. So sellers and buyers have found each other. The middle is where it's tested. If you achieve the middle, then it no longer counts as a consideration for a catalyst. So you're always kind of paying attention to something like that. And like an example would be today. Market fell, there's the V, and the middle was there. You can kind of eyeball where that middle is. You can see we touched the middle. So once you touch the middle, it no longer counts. You're looking for the market to move in a general straight direction. And today we have that, right? It's easy to see about right here. We started getting that. Market dipped, rallied a little bit, and then started selling and never retraced to find half. You had sellers, then buyers were found, and you never met the middle, and selling pressure overwhelmed. That's a key. So what that does is it tells you that this is what's called your anchor point. So we mark it right there. The anchor point is where you start your calculation from. Now from here, you keep dragging this line, and I have a fib tool. I take a Fibonacci retracement tool, and I gut all the numbers. I get rid of all the garbage Fibonacci numbers because they're garbage. And I leave just a 0 and a 100 and a 50. So it's just like a line with a middle point. So I draw a distance and then it shows me the middle. I'm going to drag this down where I start seeing those V's get bigger and smaller, right? It's like the V is there and it's slightly bigger and then slightly bigger and then slightly bigger, bigger. And then this is probably the biggest one and then it tightens up and gets small right there. That first run move to kind of mark that up. Okay, so these are 2 key pivots going forward starting now. Now, this being your anchor point, all you do is you measure a single distance from there of the risk interval from your anchor. 43 points on the S&P. Then from here, it's 43 points lower. Okay? So that would be what, 69? 57.11 minus 43, 69. And then your catalyst is 1 risk interval below an anchor point, which is here. Just like that. So when you can identify that something is created, a red line, then it justifies now you measure for a catalyst. So this is a confirmation that there's an illiquid moment happening, a volatile moment where the market's being bombarded by one side. And then your cat is just active from this point forward. I think this is at 69, right? Did I measure that right? Yeah. Yesterday's class is in the Discord. The video that we watched together is in the Discord. Under the 20 days boot camp. If the market is random, how do people make money using traditional technical analysis? They really don't. They make money using risk management. Remember, the first class we teach, I teach you that you can randomly long the market every day, and as long as you only lose a certain amount, such that you have half of your account still intact at the end of the month, you make money randomly longing the market. I wrote a computer program that proved that under any condition, any recession, any sell-off, randomly longing the market and just making your position size smaller each time you lose to have half your account at the end of a month. You lose 3 months in a row, you have half of half of half. You have an eighth of your account left. You will still make money over time. The market is random, but biased to the long side. There are certain periods where markets have 70% candles are green on the dailies. But on average, there are just as many greens than reds in any environment. So the market goes up more often than not as 70% of trading months are green in the last 10 years. So you just need to survive long enough for the bull market to take over. And it's proving that technical analysis or any kind of analysis is not the key to making money as a trader. The key to making money as a trader is surviving long enough that the odds work in your favor. You're betting on the law of large numbers. Whereas statistical advantage comes in your behalf. The more iterations of a game you play, the statistics are likely to play out as long as you have enough iterations to play. So you survive long enough. If you have 60% odds on a trade, if you can trade infinite amount of times, you should have a 60% win rate if you survive long enough. The problem is most of you don't survive long enough for your odds to play out. Anything below that, Daniel, is irrational and random, right? The market's going to behave erratically, and we take a stance of automatic sit out when cats are active. The market gets a little funky from here. Now, let me make sure that's the right number. 69 plus 43 would be about, what is this, starting at like 13? Yeah, 43. Today paid for your lifetime membership, Miles. My man. There you go. Thanks, man. I appreciate it. Yeah, of course, Daniel. No problem. No problem at all. Glad you guys are still sticking around. We're streaming longer than usual, but it is Friday. We're taking it easy. Teach you guys a little bit of stuff while we're still here. Yeah, not a bad month in the Tradeifys. I'm pretty excited. I only had to reset 3 accounts, which is good. This stays closer to 12,000 a day, but I passed the 50K mark, which is good. I'm halfway to my $100,000 goal. Look, the whole month, it's like pretty good, but one little teeny blip here. And again, this was the day that market absolutely crashed out and I got hammered. But I didn't actually make bad trades. I made 2 really small trades. I longed and stopped and longed and stopped, and it was probably like $1,500 per account. So each time, that's $3,000 total per account times 5 becomes like a magnitude of like 15 grand. So between, 1,500 and 2,000 each attempt per account adds up. That's why it was so big. But either way, relative to everything else, it wasn't that bad because roughly at the 50K mark that it was kind of at, it was only like 30% of the account. That was big. I was taking big leverage on this, but it could have been much worse for sure. But not bad. So the stats are pretty good. So my stats actually this month were decent. Even under this environment, which has been very bearish and very choppy, I've still managed 72% win rate, which is good. This is what people don't understand. Like, they say, like, how come I can't do what you do, Matt? Like, I've been here for a little bit. I'm still trying to figure out how come I can't get the win rate. It's because I survive long enough that the odds take over. You're just not surviving long enough. If you trade 5 or 10 days and you don't make it, your odds are going to be off. You're going to blow up a couple of days, and then I'm still trading when you're sitting out. The fact is, my risk management is so immaculate at times. Like, I know exactly how much I need to be trading, that I survive. I stay in the game longer, and because of that, my true edge is really, I have some pivots that are 60%, some pivots that are 80%, and some that are 90%. The odds tend to work in my favor. As you see in the bear market, I'm trading roughly 70%. When you guys saw my bull month, my first round with Trade of 8, my stats were like 85% win rate. I literally, a whole month was 85%. So I have a high win rate because I have a true statistical edge, but I survive long enough for it to play out. Does that make sense to you guys? You have to last enough iterations for the edge to eventually take over, because you can have asymmetric periods of like 10 loses before you win, 90, right? Whatever the case may be. Odds only play out once you have enough data to bring the odds to fruition. What is my take on the current PA? What do you mean by PA? Are you talking about Apex? I think my YouTube is frozen. Hold on. I can't see the rest of what you wrote there. Sometimes YouTube chat like freezes up. Oops. That being said, the goal is just survive as long as you can. And that the true edge that I have becomes realized the longer I trade, the longer I stay in the game. Like, the more trades I make, the more days I can survive. Ah, there we go. There's the rest of the commentary. It was frozen. Have you ever heard the market as an algo running on a loop? Nah. Running on a loop, I don't understand that part. The market, the futures market, is certainly an algorithm, and it's a very well documented algorithm. The futures market is actually a series of algorithms controlled by the CME group. You have a bunch of different protocols that run and set the price. This price you see on your screen, the bid and ask, the best bid and best ask in futures is set by a machine. So is the open price, the gap price, so is market shutting off, shutting on. I don't know about a loop, but the market is certainly, futures markets are designed to track an underlying asset. Therefore, they must be priced according to that asset. So a computer is trying to track the underlying with futures at all times. So yeah. So the futures market is run on an algorithm. It's not just purely supply and demand. It can run on its own. We can push the price of futures up and down through bombardment, but once that bombardment ceases, the futures market snaps right back into place of what it's tracking. That makes sense. Yeah. PA for price action. I thought you were talking about PAs like Apex PAs. By taking the current price actions, the market has become unstable and structure is broken. This pink line on my screen is, we call it a catalyst. It has to do with the margining aspect of futures. If futures move a certain distance beyond what CME span sets as the performance bond minimum for clearing firms, i.e. you guys know it's the maintenance requirement, or margin requirement, the market has broken anticipated expected ranges in futures, where the market has become extremely illiquid at this point. The stock market is random, but below this pink line today, the stock market is even more random than random, if that's even possible. it has zero predictability at this point. The market is now in margin call territory where anything can happen. What we usually do is we sit out and stay away from the market. This is an automatic sit out rule for me. I don't touch it at all because the market is giving you no clear direction on what it's going to do, and it's beyond structure, so indicators can't predict anything. Right now, you're getting random volume spikes all the time because people are now in a period of getting squeezed. So the margin requirement, let me explain something to you. In futures, say you pay $15,000 for a futures contract for one, right? And the market falls where you actually lose $15,000 worth of value, and now your contract has zero value to it, and then it goes below that. Now your contract is actually negative. You can hold a futures contract beyond the point of liquidation. At zero, a retail futures broker will liquidate you. Below zero, other people just have to come up with the money to offset the loss, or else they have to close the position due to margin calls, right? You must have the maintenance requirements to stay in the position actively. So we're exploiting that fact, and when the market is below this pink line, the probability that people are in upside down, less than zero exposure, meaning that they are now eating into beyond the margin capabilities they had. They no longer have the maintenance to hold the contract. They must likely sell that contract at some point today. Therefore, below this pink line, you get tons of people in that effect. If it's an algo, how can it be random? Because there's two parts to it. Price action of the underlying is random. Let's start at the top. S&P futures, let's do NASDAQ futures. NQ futures tracks the NDX, okay? Almost equal to NDX. NASDAQ futures, you can trade. Let's put a T here. NDX, you can't trade. It's just a math equation, which is equal to some function of the stocks in the index, okay? Right? The stock market is not an algorithm. It is purely supply and demand, and bid and ask is set by market makers, okay? The stocks have natural order flow based on what people want to buy or sell. This is 100% random. The stock market. Which stock goes up, which stock goes down. You don't know what people do or don't want to buy. This is random. This is equal to this, so this is not random, okay? Not random. NDX is 100% equal to that function at all times. You can predict NDX if you know the value of the stocks, which the NASDAQ is always appropriately priced. The NQ, however, has two protocols. Number one, if the NDX starts going up, the NQ is going to start pricing higher to track it. That is not random. However, the order flow, because we can trade this as well, we can short this while longing the stocks and physically push them away from each other. But the minute that we stop applying that pressure to do so, the rubber band snaps back into place. So anything that's tracking an underlying spot price, a commodity, for instance, like oil futures is naturally mathematically tracking the oil spot price from the Platts open data for spot trades, right? But it also has its own independent supply and demand that can deviate from what it's tracking. Does that make sense? So the underlying movement is random, plus its own supply and demand is random. But when that supply and demand is gone and balanced out, the tracking algorithm gets right back on track to what it's supposed to be tracking. You always hear like Bitcoin and all these things, like a lot of these things are pegged to something. When you say pegged to something, it's tied to something. So there's like a spring between the NQ futures, right? A little spring in the NDX. If the NDX is trading higher, well, the spring is still holding NASDAQ and it's going to kind of move higher. We can obviously push NASDAQ lower by selling, but once we stop that selling, it's going to snap back into place, continue to track the underlying. And all markets are like this. You can trade NDX and options, but you can't trade NDX as an instrument. You can buy an option for anything, but NDX options are cash settle instrument. There's no underlying basket inside of it. It's just like a cash swap. So you can trade index options, but that's it. You can't actually trade the NDX. It has no supply and demand. The options are just cash settled instruments, so you're just gambling on the value of NDX. You can go buy 10 million NDX calls and you would have zero effect on the NASDAQ value itself. The stocks wouldn't even be listening to that or caring. Was matching algorithm a CME group created to provide liquidity in the market? Yes, provide liquidity in the market to allow market makers to mobilize liquidity to provide to the market and to give people time to analyze what they're doing as markets are becoming crazy and volatile. Markets will hesitate or stop or pause for moments to give people time to breathe so the market doesn't just collapse. The main goals of the CME group's algorithms are to allow liquidity to go because liquidity keeps the market going. Illiquid markets crash and crashes bankrupt dealers and banks. And you can't have a casino if your dealers are bankrupt. So it's to provide order and stability to the market, the goal of maximizing liquidity. They can't create liquidity because liquidity requires natural buyers and sellers, but they can stimulate an environment that maximizes liquidity by providing a stable, orderly market. And the rules that the CME group applies to the control of the Globex algorithms are designed to keep the market orderly. So that makes sense, is that the algorithm itself is not random, but the behaviors of us are random. That's how the difference is the two. So when you have a consistent portion and a random portion, the overall portion is random. So when I say markets are random, mind up, even though there's an algorithm designed to do a couple things, it's still random. Are we sitting out for the day? Yep, sitting out for the day. So autopilot in a plane. Plane is flying, there's a trajectory, and all of a sudden a random wind comes and then blows your plane this way. And the pilots are just taking a nap. And then once the wind stops blowing, or while the wind is pushing you this way, the plane is steering into the wind to offset. And then the plane is going to like oscillate until it gets back on path. It overshoots. Process control systems, you guys are engineers, will tell you that this is a thing, right? It overshoots, it overcorrects, then it corrects, and then it stabilizes. So the portion of doing this is not random. This is algorithmic. But the stimulus on the system is random. Does that make sense? You're driving down an icy road. You hit a patch. You start hydroplaning this way. You turn this way to turn, and then you start hydroplaning this way. And then you turn this way, and you start hydroplaning this way. And you course correct to get back on path. Your behaviors aren't random. It's algorithmic. You turn this way when you're going this way, and vice versa. But the icy patch was random. Therefore, when you zoom out, the whole system as a whole was a random, because somebody on the outside watching couldn't forecast that you were going to hydroplane. Does that make sense, right? Do you think we double bottom SPY 538 go lower? I don't care. That's what my answer to that is. I don't know. I don't care. I take an agnostic approach to this. Once a catalyst is active, the answer is, if you care, you're going to try to do something when you shouldn't do. So do I think we go lower? I think we can go lower, but I'm not betting against it at all. Don't even care. Just got here. Are we sitting out? I'm sitting out, yeah. Your tools made on the basis of CME Group not incurring losses due to the market making activity. I think that's like a principle underlying the equations. Ours are mostly just explaining the, like CME Group creates an equation that tells you this is the expected range where liquidity is in futures. So here's the margin requirement. So we reverse engineer the range from the requirement itself. We don't really go into like CME's profitability or anything, but that's a good thought though. Damn, I'm good at explaining it. So the icy patch win, large investor manipulation in a sense. Yeah, like large investor manipulation or news or insider trading or whatever. It's, you never know the motivations of people, and people can behave any way that they want. And we can't ever pierce that veil to understand every individual participant's motivation in the market. Like, why are you longing? Why are you longing? Why are you longing? We observe the market as a bulk system standing on the side of the road while somebody's driving. And we're trying to guess, are they going to hit an icy patch or not? And if they hit the icy patch, it's random. If they do. But if they do hit the icy patch, the behaviors from that point are predictable. You're going to know that every driver is going to try to steer back on course. So the predictable portion of that is what you try to exploit in any algorithmic trader like us or quantitative traders trying to exploit the portion that's random. We don't know if we're going to hydroplane, but we're watching. And if you do, we know what people do next when that shit happens, right? I used to be a teacher. I used to teach engineering classes at the University of Houston. So my job while doing that was to explain like complex mathematical and engineering based topics in a way that like a student can understand. And I always try to come up with like really good metaphors or ways to explain things that was understandable in a realistic sense that was easy to wrap your head around, right? So observer on the side of the road could sit there and say, I bet you this car is going to hydroplane. Nope, I was wrong. I bet you this one will, the next one. Oh, I was right. I bet you this one won't. Oh, it did. I was wrong. And they're going to have a random effect of guessing who will or won't hydroplane. You don't know the state of that car's tires. You don't know if that driver wasn't paying attention. You might be able to tell if they were speeding or not, but you don't know if they're exactly lined up with the icy patch on the road to hit it just that sweet spot. So you're going to be coin flipping, betting with your friend who's going to hydroplane or not. But if you took the other bet, which was, I bet if this guy hydroplanes, he's going to steer into the turn, and you would get that bet right more often. So then you wait for the effect, and then you bet on the correction. And algorithmic traders understand that about the market. There are consistencies inside of it that behave the same way every time an effect happens. For instance, every time the S&P falls 5% overnight, the circuit breaker triggers. You can predict that. Every time we fall in 5%, the market's going to close. And we all know that, 100% certainty. So certain behavioral things that people do, you can't affect. You can't guess tonight's going to be circuit breaker, but you can guess if the market has fallen this much, they're going to steer into the hydroplane, and we're going to close the market down here. So what we do know is if the market moves 43 points, which is the number in this table, off of an event, even a self-fueling event, that the market's going to be chaotic every single time, and we sit out. We know with 100% accuracy is that the market lows are going to become exponentially lower, meaning there's going to be curvature. Let me show you. I can draw a trend line off of these bottoms. Let's just draw it. And that you can see that as I'm drawing the trend lines, the lows are not falling linearly. As you see, even of now, we're breaking the low even faster. If the market was just falling, it would bounce off of these trend lines. But do you see that the low is becoming even lower? Do you see a little bit of curvature here as the lows are becoming even exponentially lower? That is what a squeeze catalyst actually does. Creates curvature. The market becomes exponentially more volatile. We know that for a fact. So this is the hydroplaning explanation. Below here, the market's going to curve. It's going to speed up. It doesn't mean it's going to fall, but the volatility is going to become exponentially higher. How do we know that? Because an indicator called the VVIX will go up, which is the volatility of the VIX, which shows the exponential change of the market. Again, when a catalyst is active, 100% guaranteed somebody's going to turn into it. VVIX is going to go straight up. A, it is. B, which is going to cause the VIX to not only go up, but become choppier as it goes up. B, so VIX is going up and becoming choppier as it goes up. And C, the S&P is going to have curvature on its way down. So these are the course corrective actions that you see when a catalyst is active. Therefore, we sit out on them. Hopefully that makes sense. The way I've explained it also gets rid of the FOMO. Yeah, like, who wants to trade dog shit that's curving? It's falling faster as it's falling. So if you think about, like, what's the mechanism that makes it fall faster? You would say anything that compounds, right? You know, interest accumulates like exponentially this way, right? It has like a curve. Well, anything that falls faster is an accumulation in the same sense. So why would something fall faster? Because it's compounding. It means one thing makes two things happen, which makes four things happen, which makes 8 things happen. It's a domino effect. Each event creates multiple events instead of one event creating one event. A domino is one domino pushing another domino down, but a compounding effect would be a pyramid of dominoes. 1 knocks over 2, knocks over 4, knocks over 8, etc. So the effect becomes bigger each time. A compounding effect is curvature because we don't know the extent at which the market will curve on itself. And why is it curving? Because you have margin calls. You have a lot of people long that don't want to get out of the long. But because somebody in front of them had to close such a large position, price drastically dropped. And now they've been brought into risk when they didn't want to have it. And now they're like, oh crap, now we're upside down. Okay, we got to sell. And then the next 2 people below them are like, stop selling. And then they have to sell. And then the 4 people below them have to sell. It becomes compounding on itself. And that's why it starts to curve and go faster as it goes. So when the market breaks the risk interval structure, which is based on futures and margining, you can see right here how it's speeding up. Does everyone see the speeding up? That's why we don't trade it. This will ruin your life. And the market avoidance strategies we teach in our boot camp, by the way, and I'll plug that really quick. We teach all these principles in our 20 days boot camp, and it's only $20. We just started 2 days ago, but can easily catch up. I'd love for all you guys to check it out. It's $1 a class. That's it. $1 per class. Let me go over principles like this. We'd love for you guys to check it out. We have reviews on this. The boot camp is very much like explaining complex things as simple as we can. The reviews are all like worth every penny, mind-blowing, best deal. Can't recommend this enough. Absolutely nothing like this. Way to gain insight into futures and options. I have the confidence, I have an edge. These are all people that have actually bought the thing. This is the thing they bought, and this is what they said. But I mean, it's just, the reviews are all here. You guys can read it yourself. I'd love to let you guys check it out. We do 3:30 every day. We do a Zoom call, and we go over a lot of topics that are very useful for traders. And mostly it's a card counting class for traders. There's a link to sign up. 3-day, you can do a refund, but it's only $20 to hang out with the group for a month. We're a team of engineers and mathematicians that put together some very good algorithms for traders that exploit kind of the mechanical pieces of the market. So Nihal, if you can't find your stride, it's okay. This market doesn't have a stride. A bear market will fail no matter what you're doing if you're a bad trader. There's no app or system that will beat a bear market. This is number one of your realization as a trader. A bear market cannot be beaten. Come to the realization of that as quick as you can, and that will save you a whole lot of money. You can't beat a bear market, and even though we're the best tools out there, we can't beat a bear market. You can't predict it. You can't predict the extent of pandemonium. Of chaos. You can't. So be comfortable knowing that you can't. Okay? Does that make sense, Nihal? You just have to come to that realization is that you can't predict the extent of chaos in a market. A bear market cannot be predicted. You can't say, when are all the people on outside of my trading room here and everybody else that's out in Wall Street, when are they done selling off? When they can finally settle down? How much risk do they all have? How much exposure do they have? How much money do they have? You can't ever tell how bad of a condition other people have. What's up, Benny? So you have to understand, when markets are bearish and selling off, no trading system can beat a bear market. Just come to that conclusion and you'll be well better off. Bear markets, just like a catalyst, are much better avoided with your money intact to save so that when the market stabilizes again, you're back to being all right. December to now is garbage market. If you guys have been having garbage results, welcome to the realization that you have to understand garbage market can't be predicted. You just have to understand that. If anybody could predict the bear market, somebody would be completely billionaires. We're all just guessing at a bottom, and you don't know the extent at which the dominoes fall. At some point, people have accumulated enough money that can survive this pressure, but you can't ever tell the extent of the chaos. So since December and now, if you have horrible performance, even though I've had good performance or whatever, the difference is I'm avoiding the market more than you are. I am, and that's definitely a fact. Sitting out, strategic avoidance, we teach this, is part of a winning trading strategy in a bear market. Pat a chance started trading in December. So LOL, right? Like if you're doing okay since December, then you'll probably be better when the market stabilizes. So we gotta have 3 more months of shit market probably. We don't know, right? The effect of the tariffs could be multiple quarters. At least it's gonna be 1 quarter. Earnings reports are gonna come out and be absolutely devastating first quarter. Maybe even second quarter could be worse. We could be in this situation for the rest of the year. So Nihal, your job is to survive. And don't be in any hurry to make money. Trust me when I say when a bull market comes, I've gone on 75-day win streaks in a bull on this stream in a bull market. 75 days without losing a single trading day. You want your goal to be to have money in your pocket when the good times come back, because the good times are very predictable once you're there. You can't predict when they'll start, but you're never a day late to a bull market. You always will be at a bull market on the correct day to be in a bull. You just never know when that's going to be, but it's very obvious to see it when it's there. And when it's a bull market, I will be literally shouting at everyone in the stream, today's the day, today's the day, today's the day. Do I think today it's a good idea to de-risk and get off stocks? Evan, I can't give you financial advice. I'm going to tell you, in December, I haven't traded a single dollar of my real trading account. Period. If that tells you anything, since December, since that big Fed day that crashed the market, and I said bear market is back, I have not touched the stock market with a single dollar in which I own. I've only traded prop firms. I have been risk off since December. So to say is now a good time to be risk off, I'm already risk off. I can't make financial decisions for you guys, but I've been risk off since December. I don't know when the low is going to come, but I know when to avoid the market. So hard to ever imagine that under Trump. And Ghost is right. Like, you don't, because Trump's desire is not going to let his ego be damaged by people, seeing a bear market. Trump's not going to let it be bearish for long. He's going to figure out a way to turn the narrative to flip it bullish if it gets bad enough. So that's why I'm thinking a quarter maximum till Trump starts spinning a good narrative. Greater market call out today. RS is the best. Yeah, I think so. So Pat Chan started trading since started watching the stream in December. You're surviving. Hey, dude, that's good, man. If you're surviving, that's all that matters. This is the crappiest market. Imagine when you start getting like bull days. Every day is just a bull long up, hedge pressure bounce, gap and goes, resilience positive. All your data is positive. It's beautiful. Bull markets are so easy to trade relative to bear markets. Bear markets are doomed from the start. Don't let anybody convince you they got a system to figure out when a sell-off market's going to stop selling. You don't want to trade volatility. You don't want to trade choppy NASDAQ up and down 100 points every 5 minutes. Nobody wants to trade that. Traders hate that kind of stuff. Only prop trading, influencer, dipshit, affiliate salesmen, losers do that shit and say that it's fun. They got no risk on the table. Real traders with millions of dollars in their pocket, not wanting to lose it, will tell you volatility is the enemy. It's your trading account. I will trade simple, light, easy bull markets all the time. And you will sometimes get 5 years of bull market without a correction. There will be better times when the market is just clean and easy and money will just flow like wine. This environment, don't try to beat it. Accept that you can't beat it. And that's the first step in your education. You can't predict volatility. It's like get touch test, unpredictable volatility. You can't predict the extent of chaos. So accept that. I'm doing bad as a trader. I can't find my stride with rocket scooter. No. You can't find your stride in a bear market, and nobody can. While our stuff is better than everyone else's, we still can't do that. Nobody can. I don't think it's possible at all to predict what people are going to do out there in the middle of chaos. You just can't. It's all random. But we can identify it faster than most people. We can sit out faster than most people. I can tell you the market's likely to crash below 59,669, and we fall another 40 points on the S&P, another 160 points on the NASDAQ, and I haven't taken 160 points of drawdown. I'm good at avoiding that. I can tell you that the market's going to fall apart and be random. You can almost see with NASDAQ how the chaos ensued. Right at the risk interval, which was basically at the same spot, the S&P. Once a catalyst is active, you can clearly see a difference. Look at how that volatility, the market's just like chopping around, trying to figure out what's going to do next. We can identify it and avoid it, which is what the best traders can do, is to avoid the bad stuff. Don't try to beat it, accept it, and then avoid it. And that's really where the pros will tell you the difference is. That's why I survive in every market, every environment. I try to avoid the bear markets as much as I can. The bull stuff will come back. Listen, you guys are in the stream. If we get a long stride of bull market, you guys will watch me make millions of dollars in front of your eyes on this stream. I've done it before. I did it in 2020. I did it in 2021. You will watch big trades, big wins, consistent gains. Bull markets are easier to trade by magnitudes. Magnitudes easier. The lack of volatility makes trading so manageable and much simpler. You don't have random news events chop you up and down, 50 points, 100 points S&P. The market is pretty resilient to news events when volatility is contained, right? So just understand, it's an unpredictable market. You will do bad in this environment. I'm doing bad in this environment, relative. I'm surviving and doing okay. I'm not trading my real money. Oh, heavens no. And my win rate is lower than it was last month. And lower, like I was trading closer to 80, like low 80s percentile. Now I'm down in the 70s. Like my performance takes a hit. I've busted 3 of those Tradeify accounts, or reset 3 of those Tradeify accounts after taking losses. So it's okay to understand that you're having a hard time. Want to learn more about the market mechanics, like what you did to create your own system? I want to help in a Rocket Scooter project and more. You'll learn anything. Dude, I love the enthusiasm. There are a bunch of committees inside of the group that are doing data analysis right now. Talk to a guy. They all get together and do back tests. There's somebody leading a back test. His name is Event Horizon. Send him a message. He'll rope you in. Message him. He's currently doing it like, so we have members in our group that get together and they do a case study on certain things. Benny's part of it. Tio's part of it. What they do is we create an indicator, or I create an indicator, and they're back testing it. They're collecting data, they're analyzing it, they're theory crafting, they're studying it, and they're coming up with, is that indicator any good? And if it's not, we're going to throw it out. We created a weekly hedge pressure resilience, which is this blue line right here, the blue one on the chart. And the goal was, what is the probability that we break blue hedge pressure if this line is less than 0? We had resiliences for everything else. Now they're testing the effectiveness of this one. So if you want to get in, like there's all kind of like volunteers that are members of the group that get together and we all theory craft and come up with numbers and stuff together. They don't even work for the company. They just do it for fun. And it's a great place to get involved because your efforts can become strategies we all use. It's really nice. But message him and be like, hey, I'm new to the group. I like to get involved. They'll find something for you to do. Moreau says, if you survive, you'll crush it when market is bull. That's right. You want the bull market to come back and everyone else is broke but you. Everyone else is broke because they're getting squeezed out of this market and you're just waiting. And the bull market comes back and you're front and center with all your money intact. That should be good. So every time we come up with something cool, we usually have case studies, and there's a lot of people. There's a couple of projects going on right now. There's somebody right now independently calculating the probabilities of the overnight dynamics. We don't know them. We assume they're going to be closer to the daytimes, which are, we know these 80%, 90% ideal, 60% non-ideal pivots. But in here, the question is, are the futures ones similar? So there's a project going on right now. Someone's collecting data every day and coming up with the stats of that. When do I think bull market is resuming? At least 1 quarter out from now. We need to go through earnings season, and earnings are expected to be bad because everyone's going to be faced with tariffs. Whether the tariff effect has been realized or not, the tariff effect will be realized at least 1 quarter away from the impact point. So if the tariffs are coming out now-ish, right, April and all that stuff, then a quarter from now, the effect might be realized, and therefore the subsequent quarterly report will pick up the details. So right now, Wall Street is pricing in quarterly earnings that are affected by tariffs. And it might only take 1 quarter for companies to adjust and figure out how to save money and be more efficient, but at least 1 quarter minimum, because that's the metric at which the companies are being engaged by, their quarterly reports right now. And they're all going to take a hit because of the tariffs. Secondly, the Fed's likely to not cut rates as quick this year. So we're going to be in a state of not really having the Fed. Now, balance sheet roll-off, which is one of the things that Powell was talking about during the press conference, the Fed is allowing the balance sheet roll-off rate is deteriorating. So QT is slowing down, which is nice, but it still doesn't mean QE. That was kind of a bullish read, which was nice to see the balance sheet roll-off slowing. But with that being said, the Fed's not going to QE, number one. So we don't really have any boost coming outside from anyone, and the tariffs are going to hit all the stocks equally. The market's still asking how low do we go, and it doesn't know yet. I would say I wouldn't expect a bottom until late summer, maybe later. The market's got some more downside to figure out. And again, we don't know the impact of the tariffs, and even worse, we don't know what new tariffs could come out and what reciprocal actions other countries are going to take. So because of the uncertainty, Wall Street has no gauge, and Trump could come out and still throw tariffs at everybody to continue nuking the market. So because of that, guessing a bottom based on just the now conditions, if nothing changed, I'd say late summer. If things continue to change, it can go further, right? So that part I don't know. But we won't miss the bottom. We'll be there that day, and the market will reverse. We'll be like, today's the day it's reversing, so we'll know. Our class is recorded. Yeah, they are recorded, and you can watch the video at any time. Every day we watch the video together as a group, and then I answer questions. You can always ask me questions in the stream or in the Zoom call about the video. And I try to post challenges based on the market that we're facing and things like that to make it helpful. You don't understand why Trump is doing these tariffs? He's trying to devalue the dollar. He's trying to create a new world. The thought is that the tariffs will force companies, like, you know how we outsource jobs where we send our jobs out of America? Tariffs will bring jobs back. Automotive manufacturers, was it Hyundai, I think, was building a plant in the United States. So to avoid the tariffs, foreign countries are going to have to hire local labor and build here to avoid the tariff. And so the goal is to create that kind of effect. To create a need for American product, American labor, and other things. As most of our labor has gone overseas, the conversions are insane on currencies. So he's trying to imbalance everything enough to like shift the power back in. And also, you know, he keeps citing the idea that when we used to be a full tariff-based economy, I don't know how many hundreds of years ago, that was actually one of the most prosperous times in the American growth. Because for whatever reason is that we banked on commerce. We didn't tax our own people to support foreign aid and foreign labor. We taxed our own people to support local commerce, which stimulates everybody equally. So it's a very complex economics problem that I don't really have a good sight on, but I can only see the effect of tariffs as being a neutral wash of the overall scheme of things. The same amount of money circulating. And I don't think it's going to hurt anybody enough that we're going to lose jobs. Therefore, the money will just circulate differently. You might pay a little bit more for something, but then that little bit more that you paid gets distributed differently to different people, which means they have more money to spend, which will cause everybody to eventually have more money to spend as it just circulates differently and faster. It doesn't lose anybody any money. What you may think is a loss to you on the tariff is a gain to you elsewhere. Some company made more money. Government made more money, then more things come back to you. It's hard to explain why I'm saying this because I can't really explain it in words, but the math in my head sounds like it's a wash. You're not really creating anything new. It's like the energy balance, right? What goes in must come out. The rest is accumulation. We're not inventing anything new. We're just forcing money to circulate at a greater rate. You have to pay a little bit more for something. So maybe companies adjust to give everybody a higher salary. You know, the thing is that we don't really know how it's going to balance out, but nobody's like creating more things or destroying more things, right? So maybe it ends up being just a wash at the end of the day. When will the video from yesterday be posted? All the courses are already posted in the Discord. The live stream that we do watching the video together is not recorded and posted. The training video is there though. If you can't make the lives, then you're not missing out of anything other than extra material. You can watch the video. It's already posted. They force more products in other countries to be sold more expensive. American products will have lower costs, so the state's money will come back to us. Yeah, these are the motivations. This is the hope that we get. Dom is right. But at least short-term prices will go up by 30-40%. Yeah, it can. It can be pretty drastic. If the companies pass the cost on to you, they can be drastic. If the companies decide to not pass the cost on you and eat the cost, then they lose money either way. If they pass the cost on to you, you might go shop elsewhere and pick one of their competitors. So competition should hopefully prevent price raises drastically, unless everybody price fixes together. You would be reluctant as a company to raise your prices really quick if your competitors weren't. If they decide to eat the cost for the sake of gaining market share, then you're also forced to eat the cost as well. Because if you raise prices and they don't, your customers will go to them and you'll lose market share. And nobody wants to lose market share. So my belief is that the natural forces of capitalism will prevent companies from raising prices drastically for everybody. Maybe just a little bit at a time. But nobody wants to create sticker shock and lose a customer. Also, I mean, I run multiple businesses. I know that feeling. When inflation hit in 2021, 2022, Rocket Scooter's prices didn't go up. I was scared of losing customers. We were the same price throughout all of that. When we finally raised our prices last year for the first time. But for 4 years, if I raise prices, I could lose a customer very quickly. So as business owners, will have to have that debate with themselves, which is better for them. Do we pass the price to you or do we eat the cost? And I think it's going to be kind of like each company's going to do it differently. I think on average, prices are going to go up everywhere on everything, but just a little bit. I don't think they're going to put the full blunt of the tariffs onto the consumer. Nobody wants to nuke their market share. Because all it takes for 3 competing companies is for one company to say, you know what, we're smarter. We're going to eat the cost of that tariffs while our competitors are raising prices. We're going to sell the same thing for 30% less. We're going to gain all the customers. And then when the tariff things maybe goes away or stabilizes, we've now got the market share. And I think every company is going to come to that convergent evolution of a result, right? They're going to come to that same conclusion. We'd rather not lose market share. So I think the companies are going to eat the cost more than they pass it on. And they pass it on, it'll be in small increments so that you don't notice, just like inflation. I do trade every day from 8:30 in the morning until about noon. Just moving money around differently, as Evan said. Right, the money's going to move around differently. I don't think it's going to have an effect on the overall health of the economy. I think it's going to be okay. But that's just my thought. Eastern, yeah. So I'm here at 8:30 Eastern until roughly noon. I'm trading like an hour longer than I normally would today. So I'll be here for like another 30 minutes. I'm just here to hang out with you guys because the stream numbers are still pretty decent. But every morning at 8:30, so an hour pre-market, we're always here every day. Remember the YouTube channel that was recommended to you that the guy may be legit from the Market Wizards? Oh, yeah. So Gold Chest is reminding us the last time tariffs were introduced, local American manufacturers also had to increase their prices. It's a lose-lose for American consumers. That is the effect. So the question is that which way do the companies choose to go if this is a longer-term thing? Chances are your prices are going to go up a little bit on certain products. But what if Trump gets rid of the income tax? What if we gain somewhere else? We never know. Which prop firm do I use the best? I have been using Tradeify lately with their straight to funded end of the day drawdowns or ETFs end of the day drawdown. I love end of the day drawdown accounts. Or Take Profit Trader. Those are the 3 that everybody here practically use more than anything. As Peter Ross said, so big guys with big wallets will be able to outlast smaller companies, by small business. Yeah. My mom works for a small business. They service the oil and gas industry by making mesh screens for the internals of distillation columns. You know, they hold the packing and stuff in. So they make the giant mesh screens, right? And they're a local manufacturer, but they service a lot of the oil and gas companies in Texas, right? We're in Houston. It's big out here. And the price raises and inflation is hitting them so hard. I mean, hitting smaller. And they're not, I mean, they're medium sized. They're definitely not a small outfit. They're a manufacturing facility. But they're feeling it bad. She's feeling it bad. And she's just straight up is saying, yeah, business is bad for everybody. Even our competitors, bad for everyone. Price raises are going to hurt smaller companies with tighter margins. Bigger companies with fatter wallets will just likely eat the cost so they can win in the end and squeeze out all the small people that can't. If I was a big corporation, I would choose to preserve market share and lower my bottom line so my stock price drops for a quarter. I explained to the shareholders, our desire is to preserve market share. We're going to present to you in our quarterly report that we're going to keep the same amount of customers by not passing prices to them as a business strategy. And while we may lose money at the front end, we will gain money from the loyalty on the back end by telling our customers we're not going to raise prices for them. How amazing would that be for the commercials on TV to say, hey, by the way, join AT&T. We won't raise prices due to tariffs, right? People, it might even become a talking point advertising. You know, buy Pepsi. We didn't raise prices. Buy Costco hot dogs. We didn't raise the price. See, I try to think ahead like 10 different steps. Who knows if this is a permanent thing? And who knows if somebody's genius business strategy is to absorb the cost to gain market share? Lower prices always gains customers. I mean, that's how Walmart got so big, right? If you have the money to absorb that blow and you believe it's temporary, that would be the smartest decision, to start outpacing your competitors in market share. So we don't know how it's going to play out. It could play out one of a million ways, and all of you guys are right with your guesses. It could be very bad for the consumer, but it also can be pretty tolerable, depending on how the companies decide to handle it. I'd like to bet that there's some smart companies out there that are already figuring out ways to not pass the cut. The goal of a company is to not pass the cost on the consumer in any way possible. Can we offset the cost by becoming more efficient? What can we do to not have to raise our prices? That's everybody's strategic business meetings right now. How do we not raise our prices because we don't want to lose customers? How do we know that our opponents are in the same boat? And how do we beat them by becoming more efficient than them? That is every board's strategy right now for the company. The shareholder, the board, the CEOs, they're all thinking this, right? I'm sure you guys are wrapping your head around it too. So if they come up with a solution, great. We'll see. T-Mobile is saying that, but they've been hijacking prices, slowly forcing others to balance. I hate T-Mobile. If a company said we're not raising prices due to tariffs, wouldn't that just crash your stock price? Well, yeah, but that's the point. You would know that. Imagine you wanted to plan some buybacks, right? You knew that the economy is going to be bullish in the long haul. Would you care? You crash your own prices and bought back your stock? There's a lot of strategies that people can employ here. Companies do buybacks all the time when their stock prices crash. And I wouldn't even say crash. I'm sure they would explain to the shareholders, yes, we're not raising prices to offset the tariffs. They're going to lose money. But then if you raise prices and you lose market share to a competitor that doesn't, you lose customers, which also loses money. Either way that you skin the cat, you're going to lose money. Everyone's going to lose money, whether it's to a competitor or on your bottom line due to the tariff. There's no way you can frame it to not lose money except for becoming more efficient. Your stock's coming down no matter what, Matt. But even so, if you say we're not raising prices, immediately your stock's going to fall because you're going to hit 15 or 20 or whatever the percent of the tariff is. What I think about crypto? Crypto has no utility for me to invest in it at all. I have no desire to trade crypto or buy it right now. It's just too illiquid and too choppy, and it doesn't really serve a bigger utility yet. Crypto might be a good investment for a 50-year time frame, but for right now, there's better things to buy than crypto. Do you guys see the curvature now that I'm explaining? Do you see how the market's falling faster and faster to the downside? You can pivot these to show, I'm connecting trend lines to show the curvature. All right, you're already curving this fast. Yeah, it's a good way to reduce your cash pile too as well, yeah. Our tools are based on a lot of data. OI is part of the equation, and OI is only presented once a day by Opera. Opera collects options data from the investors who own options once a day. And all the reportable options positions are collected by Opera and released once a day. OI is only known once a day. Gold is better. Gold is probably a better investment than crypto. I agree. All right, y'all. I'm going to chill out for my Friday. We're watching the market kind of completely collapse on a catalyst. I was shorting today, made a pretty decent bill. I think I made $12,000 today. Very nice. I'm on my Tradeify funding program. I'm trying to get to my 100K target. I'm up 50K in profits with Tradeify. Very nice. My goal is actually 150, but 100 is the first milestone. And I think we'll get there. And actually, that isn't even updated. I think I am at 50 right now. Hold up. It hasn't reflected the updated last trades that I made. It's been a solid month. I've had a good month. All my trades are shown on screen, fully transparent. You guys, y'all know that. We're glad you tuned in. I'm gonna get out of here. Don't forget to join our boot camp. 20 days, $20. Teach you everything we know about finding liquidity, market avoidance strategies like you see me doing today, risk management, position management strategies, or how I have been doing well in this crappy market. How you bet is the most important thing you can do. We'll see you guys later.
Illuminate the darkest night.
If there was real-time open interest, that would be a cheat code to the stock market. No, man. If I had the real-time open interest, I'd never lose a trade. That transparency would be a gold mine of information. It doesn't exist. It's everyone's holy grail. That'd be amazing. To know the real-time options landscape, oh my God. Oh my God. Do I have an indicator? Yeah, Rocket Scooter platform. This is all these tools in this indicator. I'm actually the CEO of the company that built this trading platform that you see me using. I'm not just a trader on YouTube. Get more information about what it is we built here. I guess you guys don't even make that clear. The trading platform that you see me using, I built with my company. And I'm also a day trader. Awesome day. Thanks, Julian. Where's the link? I just posted it for you right above. Rocket Scooter is a trading platform built by traders and engineers who are trying to find a next level type of analysis. Finding liquidity and predicting volume is what we try to do, more so than using price action. Our bootcamp is in that link. You can check it out. It's only $20 for 20 days. We'll teach everything we know, and it's a really, 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 really strong set of classes that teach how to find liquidity and how to bet around it. Today is arguably the most important of the classes. So sign up today if you want to come. Class number 3 is liquidity map straight up. It goes right nosedive into our strategy. How we use options to find liquidity in the market. Thank you, Lamb. We'll see you later. Oh, I got to get you guys your accounts for winning. See y'all.
Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket Scooter leads, no fear. No more guesswork, no more loss. Seeing paths the others cross. Institutions will be seen. Predict the flow like a machine. Rocket Scooter, you got the key. Pull back curtains, let me see. Where institutions hide. Doubt can't live where you reside.